A very good morning, students. So welcome to the straight start taxation classes. So in this session, we are going to discuss about November 2022 revision test papers. So first session, we will discuss income tax. In the next session, we will discuss GST right now. So subjects like taxation, amendments plays a vital role, and RTP covers the amendments which are applicable for November 2022 exams. So in every examination attempt, you will be having RTPs, right? So it is very advisable to each and every student to prepare at least two RTPs of the relevant exams. Like for November 2022 examinations, so one student have to prepare the November 2022 RTP and as well as May 2022 RTP. It's advisable. Right, sir. Every one of you. And generally, before the examination attempt, the amendments are made applicable up to 6 months. That means for November 2022, the amendments made applicable up to 30th April 2022, applicable for November 2022 examinations. So 6 months gap should be there between the last amendment and the examination attempt. Are you following, sir? So you can see here the income tax law as amended by the Finance Act 2021. So the relevant Finance Act is Finance Act 2021 for November 2022 examinations, including all the significant notification circulars issued and legislative amendments made up to 30th April 2022 or applicable for November 2022 examination. Right, sir. Sir, I have latest updated my income tax and GST material. The last time when I was updated, it was in the month of July 2022. The last updation was made. So that means whatever the taxation material and GST material I have provided, which covers all the amendments applicable for November 2022. So in my regular classes, I've already covered all these amendments. Are you following, sir? Every one of you. Right. So now let us start with case scenario, sir. Yeah. So based on these case scenarios, you will be having some MCQs. This time the RTP was prepared in such a way that, right, which covers all the amendments and especially when it comes to the MCQs part, right, the MCQs which were given in the RTPs were excellent and excellent, having very good depth. Okay, right. Let us see the first one. High Tech Limited, a real estate development company, entered into an agreement with Mr. Sakshar, a resident individual, on 25th of June 2019. So date of agreement 25th of June 2019, as per which Mr. Sakshar agrees to transfer a plot of land measuring 12 acres in New Delhi to High Tech Limited. Mr. Sakshar purchased such land on 14th of July 2017 for 80 lakh 50,000 rupees. Now, let's come to the notes for the detailed understanding. RTP of November 2022, and initially we are discussing income tax portion. Case scenario. Two parties are involving here. Mr. Sakshar, who is happen to be the transferor, who transferred his 12 acres of land to High Tech Limited, a real estate development company, which is happened to be the transferee. And what was transferred here? 12 acres of land. And what is the date of transfer? DOT stands for date of transfer. When the transfer took place, ma'am, the transfer took place, you can see here, 25th of June 2019. Right, sir. They entered into an agreement. So that means on that particular date, the land was transferred, ma'am. 25th of June 2019. Okay, now. And Mr. Sakshar purchased this land. Date of acquisition by Mr. Sakshar. When this land was purchased by Sakshar, Sakshar purchased on 14th of July 2017 for rupees 80,50,000. So date of acquisition 14th of July 2017. And what is the cost of acquisition? Rupees 80,50,000. 80,50,000. Okay, ma. So this is the information we have extracted from the paragraph 1. Now moving on to the paragraph 2. High Tech Limited plans to develop a high-rise society of 250 flats on such land. In consideration, now coming to the consideration part, High Tech Limited paid a part consideration of 1 crore to Mr. Sakshar on the date of agreement and would provide 3 flats in the society to him as a final settlement. Okay, sir. So from the second paragraph, we can take, the consideration part and how the consideration is being received, Amma. The consideration part is cash consideration rupees 1 crore and consideration in kind 3 flats. So here for transferring the 12 acres of land to High Tech Limited, now the High Tech Limited paying him to Mr. Sakshar consideration in 2 forms. Cash consideration 1 crore and the consideration in kind 3 flats amount. Okay. Now, the certificate of completion of the society was issued by the authority on 10th of August 2021. This is what we call date of completion of construction or the completion certificate issued by the competent authority. Okay, ma. So in which previous year the completion certificate have been occupied, ma, received during the previous year 2021-22. On such date, the stamp duty value of the each flat in the society was 2 crores 51 lakhs rupees. Okay, so that means here the 3 flats consideration you have to take as rupees 2 crores 51 lakhs each. For each flat, it is 2 crores 51 lakhs consideration in kind, right? So whenever you're receiving the consideration in kind, whatever the stamp duty value is there in the year of receipt of the completion certificate from the competent authority, that stamp duty value should be taken for the purpose of calculating the full value of consideration. That we will discuss in section 45(5)(a). Don't worry, I'll show you that provision as well in our material. Subsequently, on 31st of August 2021, Mr. Sakshar sold 2 flats in the society to Mr. Kevin for a consideration of rupees 2,70,000 each, while the stamp duty value of the each flat on such date was 2 crores 98 lakhs. During the previous year 21-22, Mr. Kevin has earned a salary income of rupees 30 lakh 50,000. Okay, before going further, let us see the MCQs, the relevant MCQs. The first one, look at the first one. What would be the tax, if any, required to be deducted by High-Tech Limited in respect of the agreement entered into with Mr. Sakshar? Right, sir. See, here, High-Tech Limited, as in the date of agreement, High-Tech Limited has paid a consideration of rupees 1 crore as on the date of agreement. It was clearly mentioned in the question, yes or no? Right? You can see here. Yeah. High-Tech Limited paid a part consideration of rupees 1 crore to Mr. Sakshar on the date of agreement. See, the total consideration is 1 crore consideration in cash plus 3 flats. But as on the date of agreement, how much amount of the consideration paid? Only 1 crore. The 3 flats will be given to him only upon the construction completion. It's not possible on the date of agreement. Yes or no? Once the flats construction was completed, then only it is possible for the High-Tech Limited to hand over the 3 flats to Mr. Sakshar. Every one of you following now. So as on the date of agreement, what was the consideration received by Mr. Sakshar? Only 1 crore. Now on that 1 crore, what is the tax to be deducted? That's the first MCQ. So when it comes to the first MCQ, MCQ number 1. MCQ number 1. The relevant provisions applicable are section 194 IC. Section 194 IC applicable. You remember section 194 IC discussed about TDS on payment of consideration with respect to the specified agreements under section 45(5)(a). Let us see in our material. And the page number is, come to page number 179. This is our module number 2 of the income tax book. Module number 2. Every one of you open the module number 2 of our material. Come to the page number 179. And here you can see 194 IC. Yeah, 178. Sorry, 178. Page number 178, where you can find 194 IC provision. Payment under specified agreements 45(5)(a). Okay, right? And here you can see the rate of TDS 10%. 7.5% is being provided during the COVID times. Now, you know, the general provisions applicable, the old provisions comes back into picture. 10%. 10%. When the TDS to be deducted at the time of credit of such income to the account of the payee, or at the time of payment, whichever is earlier. Okay, now. So here 194 IC is applicable. What is the rate of TDS under section 194 IC? 10%. The rate of TDS is equal to 10% of the consideration. Right. And in the MCQ, it was clearly mentioned that, right? So what is the tax to be deducted in respect of the agreement entered into with Sakshar? So as on the date of agreement, only 1 crore was the consideration paid. So consideration paid in cash, 1 crore rupees. This is as on the date of agreement. As on the date of agreement, the consideration paid only 1 crore. The rate of TDS 10%. Now the High-Tech Limited is to deduct the TDS. TDS to be deducted. TDS to be deducted under section 194 IC is equal to consideration paid in cash as on the date of agreement 1 crore into rate of TDS 10 percentage. So 10 lakhs is a TDS amount to be deducted by the high tech limited, sir. Right, sir. So the answer for the first MCQ, A. 1A is the answer, and you can check it out. MCQ number 1A. 1A. So that's the question now. What would be the tax if any required to be deducted by High Tech Limited? The TDS to be deducted by the High Tech Limited is rupees 10 lakh. Every one of you following now, right? Now look at the second MCQ. What would be the capital gains in the hands of Mr. Sakshar in respect of agreement entered into with High Tech Limited, and in which year it would be taxable? Right. So now in the second MCQ, we were asked to find out the capital gains taxable in the hands of Mr. Sakshar. So MCQ number 2. MCQ number 2. Calculation of capital gains taxable in the hands of Mr. Sakshar. So first of all, before we are going to calculate the capital gain, so we need to decide few things. Like, first of all, we need to decide whether the asset transferred, that is the 12 acres of the land transferred, is a short-term capital asset or long-term capital asset. Because depending upon the nature of the asset, the calculations depends. If it is a short-term capital asset, then we have to calculate only the cost of acquisition. We have to take into account only the cost of acquisition. In case if it is happen to be a long-term capital asset, we have to calculate indexed cost of acquisition, for which we need to have the indexed, CIA factors, cost inflation index factors. Okay, so first let us decide the nature of the asset. The first point to be decided, nature of the asset. Nature of the asset transferred. So what is the date of acquisition number? Date of acquisition. So Sakshar purchased the plot of land on 14th of July 2017. Right, ma? 14th of July 2017. What is the date of transfer? Date of transfer. And these were transferred on 25th of July 2019. 25th of July 2019. So, therefore, period of holding is equal to, it starts from 14th of July 2017 to 24th of June 2019. So basically the date of transfer we should not consider, Irma. Yes or no, right? You might have already studied in the period of holding calculation, right? Now, 14th of July 2017 till 24th of June 2019. You can see it comes out to be hardly some 1 year, 11 months, approximately, right now. Okay, now 1 year, 11 months, 10 days, something like that. Means I can say the period of holding is less than 24 months. Since the asset transferred was a land, when it comes to the land, if the period of holding is greater than 12 months, it's a long-term capital asset. If the period of holding is less than or equal to 12 months, then it's a short-term capital asset. Yes or no? For the land and buildings, the period of holding is 12 months. 12 months. Right. So here you can see the period of holding is less than 24 months. Hence, sorry, Amma, it's not 12 months, 24 months. Here also it is 24 months. Since the period of holding is less than 24 months, the nature of the asset transferred is a short-term capital asset. Okay, ma. It is a short-term capital asset. So only cost of acquisition is required, which is already given in the problem, 80 lakhs 50,000 rupees. Yes or no? Now, the second thing we need to understand here is what is the full value of consideration? What is the full value of consideration? Okay. Now we can see here a part of the consideration is received in cash and a part of the consideration is received in kind and yes or no? Every one of you. So here full value of consideration is equal to, I can write the formula like this. Consideration received in cash, consideration received in cash plus consideration received in kind. Okay, now here consideration received in kind and that means stamp duty value of the flats, stamp duty value of the 3 flats. Okay, now so consideration received in cash is rupees 1 crore plus stamp duty value received, stamp duty value of the 3 flats received. Ma. Okay, now so now which stamp duty value should I take here? Sir, you can see here the stamp duty value in the previous year in which the completion certificate was issued 2 crore 51 lakh. So this is what we have taken for the purpose of calculating the full value of consideration. We have already seen this in our material. Ma. You can check out here. So this is section 45.5a. Section 45.5a. And here you can see if the transferor happened to be an individual or HUF, then you can see the stamp duty value on the date of issuance of completion certificate plus cash consideration will be your full value of consideration. Okay, now so whatever the consideration received in cash plus the stamp duty value as on the date of issuance of the completion certificate will be your full value of consideration. Am I clear? Now, what is the stamp duty value as on the date of issuance of the completion certificate? 2 crore 51 lakh. 2 crore 51 lakh. Clear? So, it is 2.51 crores into 3 flats in totally we have received. Na? Yes or no? Now, what is the full value of consideration here? Calculate everyone. 2 crore 51 lakh into 3 plus 1 crore rupee. So, you will get a 8 crores 53 lakh rupees. Eight crores 53 lakhs rupees, the full value of consideration. Now, the third thing you need to understand is year of taxability. Year of taxability. In which previous year the capital gains are taxable? Sir, what is the date of transfer? The date of transfer is 25th of June 2019. Yes or no? You can check out here. 25th June 2019. So that means the year of transfer is previous year 2019-20. So as per the general rule, capital gains are always taxable in the year of transfer. That is what we have learned in section 45.1. Do you remember, sir? The general charging section applicable for capital gains, 45.1. Capital gains are always taxable in the year of transfer, but we do have some exceptions to that. And all that exceptions we have studied in section 45 series. special charging sections which are applicable in special circumstances like 45 1A, 45 2, 45 3, 45 4, 45 5, 45 5A. Specified agreements. The capital gains are taxable in the previous year in which the completion certificate is issued by the competent authority. So here the year of chargeability is equal to year of chargeability, year of taxability is equal to the previous year in which completion certificate was issued. Previous year in which completion certificate was issued by the competent authority. So that is during the previous year 2021-22, because we have received the completion certificate when Amma? We have received the completion certificate on 10th of August 2021. The certificate of completion of the society was issued by the authority as on 10th of August 2021, means previous year 2021-22. So the capital gains are chargeable during the previous year 2021-22, not during the previous year 2019-20. Okay, ma. So these are the very important things before you are going to make the calculations. Clear, everyone? So calculation of capital gains. Calculation of capital gains for the previous year 2021-22. Full value of consideration. How much we have studied in point number B? Full value of consideration 8 crores 53 lakhs. 8 crores 53 lakhs. Since it is a short-term capital asset, we have to take what, Amma? We have to take cost of acquisition minus cost of acquisition. What is the cost of acquisition given, sir? Cost of acquisition given 80,50,000 rupees. Just give me a second, sir. Minus cost of acquisition 80,50,000, Amma. $80,50,000. So if you deduct, you will get short-term capital gains. So how much you are getting, sir? 8 crore 53 lakh minus 80,50,000. 7 crores 72 lakh 50,000 will be your short-term capital gains. 7 crore 72 lakh 50,000 rupees, Amma. So you can check it out. The answer 7 crore 72 lakh 50,000 and chargeable to tax during the previous year 21-22. That is what we got now. During the previous year 2021-22, 7 crore 72 lakh 50,000. So for MCQ 2, answer number C. MCQ 2, answer number C. Okay, ma. So before you are going to calculate the capital gains, first you need to decide three things. Number one, what is the nature of the asset? The nature of the asset, we have decided short-term capital asset. Number two, the full value of consideration. Consideration received in cash plus consideration received in kind. What do you mean by the consideration received in kind here? Consideration received in kind means to be the stamp duty value of the 3 flats, and the stamp duty value means to be here stamp duty value as in the date of receipt of the completion certificate. Okay, now, and then you have to decide what is the year of chargeability. As per the general provision, the year of chargeability will be the the year of transfer, but this is a special case 45(5)(a). In the case of 45(5)(a), the year of chargeability will be the previous year in which the completion certificate was issued. And okay, now every one of you, now let's moving on for the MCQ number 3. Determine the capital gains or losses in the hands of Mr. Sakshar in respect of the sale of 2 flats to Mr. Kevin during the previous year 2021-22. For the purpose of answering this MCQ, assume that no cash consideration was paid by High Tech Limited to Mr. Sakshar. So that means here consideration is equal to, you have to take only the 3 flats, only 3 flats. Okay, now out of the 3 flats he received from High Tech Limited, he sold 2 flats to Mr. Kevin and to Mr. Kevin. Now MCQ number 3. MCQ number 3. Who is the transferor and who is the transferee, Amma? Again, Mr. Sakshar is a transferor who transferred 2 flats to Mr. Kevin who is happened to be the transferee. What was transferred, Amma? 2 flats. And what is the date of transfer? For which we need to go on to the theory once again. Yeah, here. Subsequently, on 31st of August, Mr. Sakshar sold 2 flats in the society to Mr. Kevin for a consideration of 2 crores 70 lakhs each, while the stamp duty value of the each flat on such date was 2 crores 98 lakhs. Okay, so the date of transfer 31st of August 2021. Okay, now as a consideration, Mr. Kevin paid how much, Amma? Consideration paid by Mr. Kevin is rupees 2 crores 70 lakhs for each flat. Okay, now, right. Now, let us calculation of the capital gains in the hands of Sakshar. Calculation of capital gains taxable in the hands of Sakshar. So first of all, again, we need to decide the things like, first, nature of capital asset. Nature of capital asset. You can see the period of holding here is equal to, what is the date of acquisition of the flats, ma? The flats being provided by the High Tech Limited to the Mr. Sakshar on 10th of August 2021, because that is the date on which the completion certificate was issued, and 10th of August 2021. So the date of acquisition of the flats by Sakshar, 10th of August 2021, and which were sold to Mr. Kevin on 31st of August 2021. So date of transfer should be excluded while calculating the period of holding now. So 30th August 2021. You can see here the period of holding is again less than 24 months. Not even a month, ma. On 10th of August, he received the flats from High Tech Limited. On 31st of August, he transferred to Mr. Kevin, sold to Mr. Kevin. Not even a 1 month. So less than 24 months. So the nature of the capital asset is a short-term capital asset. Okay, now immovable property, we have already seen the period of holding, we have to see 24 months. If the immovable property kept for less than or equal to 24 months, it's a short-term capital asset. Kept for more than 24 months, it is a long-term capital asset. Okay, now, so nature we have decided it is a short-term capital asset. The second thing we need to decide, full value of consideration. Full value of consideration. Now, what is the full value of consideration here? Right. So You can see the actual sales value, how much the sale value is rupees 2.7 crores each flat amount. But as on the rate of the transfer, what is the stamp duty value? You can see here the stamp duty value of each flat on such date was 2 crores 98 lakhs. So as on the date of transfer, the stamp duty value is 2.98 crores each. Here you can see the sale value of the property is less than stamp duty value as on the date of transfer. If the actual sales consideration is happen to be less than the stamp duty value as on the date of transfer, then immediately section 50C provisions comes into picture. So any land or building or both transferred for a consideration which is lower than stamp duty value, then as per the provisions of section 50C, full value of consideration is equal to stamp duty value, not the actual sales consideration. This provision we have already studied in our capital gains chapter. You can check out here in the page number. Yeah, this is page number 91, module number 1 of income tax material, module number 1, page number 91. Okay, so where we have seen section 50C provisions, where the sales consideration less than stamp duty value, then the stamp duty value shall be deemed to be the sales consideration. But of course, here we need to see one more criteria also. The criteria is the actual sales consideration shall not exceed 110%. Sorry. The stamp duty value should be higher than 110% of the sales value only. Okay, now. Right. So 110% of sales value, actual sales consideration. That means 2.7 crores is the actual sales consideration into 110%, which comes out to be 2.7 crores into 110%, which comes out to be 2.97 crores. And what is your stamp duty value? 2.98 crores. See, generally, if the deviation between the actual sales consideration and the stamp duty value, if it is less than or equal to 10%, okay, fine. Because the department is accepted 10% variation, you can go ahead with your actual sales consideration as your full value of consideration. You can go ahead with the full value of consideration is equal to 2.7 crores. But if the deviation, the variation between the actual sales consideration and the stamp duty value is more than 10%, then 50C triggered. Then you have to take the stamp duty value as your full value of consideration. You can check out here. The actual sales consideration 2.7 crores, add a 10% variation, which comes out to be 2.97 crores. If your stamp duty value is less than or equal to 2.97 crores, you can continue with the actual sales value. But here your stamp duty value is more than 2.97 crores. That means the variation is more than 10%, which is not acceptable to department. So that is why department triggers section 50C. Are you following now, everyone? Everyone, right? So you can see that provision in our material also. Yeah. Third proviso to section 50C1, where the stamp duty value does not exceed 110% of the actual sales consideration, then the consideration so received shall be deemed to be the full value of consideration. Does not exceed 110% of consideration. That is what I've already told you. If not exceeded 110% of your actual sales consideration, 50C not applicable. But if the stamp duty value exceeds 110% of your sales consideration, 50C applicable. And here that is what happened now. Your sales stamp duty value 2.998 crores, your 110% of sales value 2.97 crores only. So the stamp duty value exceeded the stamp duty value. Therefore, the stamp duty value greater than 110% of actual sales consideration. Therefore, section 50C applicable. So therefore, you need to take full value of consideration is equal to 2.98 crores for each flat amount. 2.98 crores for each flat. Okay, now we are ready to calculate capital gains. So capital gains calculation, full value of consideration, ₹2.98 crores, 2.98 crores into 2 flats kadama సేల్ చేసింది 2.98 crores into 2 flats 5 crores 96 lakhs minus, since this is a short term capital asset, we have to take the cost of acquisition. Now the question comes, what do you mean by the cost of acquisition here? So these flats have been acquired by the Sakshar from High Tech Limited. And why the High Tech Limited given these flats to Sakshar? Because Sakshar transferred 12 acres of land to him, land to High Tech Limited. Okay, now, right. So as a part of consideration, it has received 1 crore as cash consideration and 3 flats. But for this purpose of MCQ, just ignore 1 crore cash consideration. It was clearly mentioned in the MCQ. Only the 3 flats you have received, Amma. Okay, now, right? Now, while calculating the capital gains initially with respect to the 12 acres of land, whatever the full value of consideration you have taken, the same becomes cost of acquisition now. Right, that means in our first MCQ or second MCQ, we have calculated now full value of consideration. Yeah, here it is in the second MCQ. In the second MCQ, we have calculated full value of consideration. This is second MCQ only now. Yeah, in the second MCQ. Right, calculation of capital gains with respect to the 12 acres of land transferred to High Tech Limited. Whatever the full value of consideration you have calculated here, the same will become the cost of acquisition in the third MCQ only. That I'll show you in our material also. You can check out here. Whatever the full value of consideration you have calculated here, the same becomes cost of acquisition. The full value of consideration deemed to be the cost of acquisition for determining the capital gains on the subsequent sale of share of the developed property. Right, sir? So 3 flats, whatever you have received, you have subsequently transferred 2 flats out of it. Okay, now. So what is the stamp duty value of the 3 flats you have received at that time? The stamp duty value is happened to be 2 crore 51 lakhs now. Yes, but the same will become the cost of acquisition here. 2.51 crore is the stamp duty value of the each flat into 2. 5 crores, 2 lakhs. So short-term capital gains taxable in the hands of Sakshar, 94 lakhs. 94 lakhs. So the answer for the MCQ number 3. MCQ number 3. Answer 94 lakhs. Yeah, 3D. Check out 3D. Okay, ma. Everyone. Now look at the MCQ number 4. What would be the total income of Mr. Kevin for the previous year 2021-22? We asked to find out the total income of Mr. Kevin. Right, sir? No. For this purpose, let's have some more theory discussion of MCQ. Mr. Kevin, Sakshar sold 2 flats in the society to Mr. Kevin for a consideration of 2 crore 70 lakhs each, while the stamp duty value of the each flat 2 crore 98 lakhs. During the previous year 21-22, Mr. Kevin has earned a salary income of rupees 30 lakh 50,000. Okay, he's also having salary income of 30 lakh 50,000, right? So MCQ number 4. MCQ number 4. Calculation of total income of Mr. Kevin. So first of all, Mr. Kevin, first let us find out the taxable gift value. Taxable gift value. Because whatever the flats he purchased from Mr. Sakshar, right, sir, he paid only 2.7 crores for each flat. But actually, the stamp duty value is 2.98 crores. 2.98 crores worth of flat he purchased only for 2.7 crores. So, if you remember, while we are discussing about section 56 subsection 2 clause 10, if any immovable property received for inadequate consideration, the difference between the stamp duty value and consideration paid, if the difference amount exceeding rupees 50,000 and exceeding 110% of the actual sales consideration, then the difference amount is taxable as gift in the hands of the recipient. So what is the stamp duty value of the flats he purchased, Amma? 2.98 crores each. Minus what was the consideration paid by him, Amma? The consideration paid by him is 2.7 crores. So the difference amount is how much, Amma? The difference amount is 28 lakhs and 0.28 crores or 28 lakhs. 28 lakhs. So this is the taxable gift amount. Sir, you have said two criteria. Yes, the difference amount exceeded 50,000 rupees. Criteria 1 satisfied. Criteria 2, 110% of the actual consideration. What is the actual consideration amount? The stamp duty value shall exceed 110% of actual consideration, or the other way you can see the difference amount shall exceed 10% of actual consideration. Anyway you can take amount. See, the difference amount is greater than 10% of the consideration paid. Yes or no? What was the consideration paid, Amma? 2.7 crores into 10%, how much, Amma? 27 lakhs. So the difference amount 28 lakhs is greater than the 10% of consideration paid, 27 lakhs. So both the criteria have been satisfied. So this will be taxable as gift in the hands of Mr. Kevin as per the provisions of section 56 subsection 2 clause 10. Clear now, everyone? Every one of you. Okay now. So now you can see here the total income in the hands of Mr. Kevin. He is having income from salaries. How much am I income from salary? 30,50,000. And income from other sources, 28 lakhs into two flats. Two flats now he purchased 56 lakhs. So the total income of Mr. Kevin, 86 lakhs 50,000 rupees. Okay, check out the answer. Mr. Kevin, what is your total income? Yeah, 4B, 86 lakhs 50,000. 4C, sorry, Amma. My mistake. While taking the salary income, we have to exclude the standard deduction. I'm writing here. Income from salaries. Gross salary, 30,50,000. 30,50,000 minus standard deduction as per the provisions of section 16 clause 1, 50,000 rupees. So net taxable salary income 30 lakhs. So make it 30 lakhs here. So then this should be 86 lakhs. 86 lakhs will be the answer, ma. So means 4C, 86 lakhs. 4C, 86 lakhs. Clear? That's good. Now moving on to the fifth MCQ, the last MCQ with respect to the case scenario. What would be the total deduction available under the relevant provisions of the Income Tax Act 1961 to Mr. Sakshar for the previous year 2021-22 in respect of the interest on loan taken from SBI? For this purpose, we need to go through the remaining paragraphs of this case scenario. There is only one paragraph left over. Out of the proceeds of the received on sale of land, Mr. Sakshar has purchased a house on 8th of September 2021 for a consideration of rupees 47 lakhs and occupied for own residence. Right. So whatever the land he was transferred to High Tech Limited, 12 acres of land, and whatever the consideration he has received out of that transfer, right, out of which, from that proceeds he purchased a house property on 8th of September 21 with a consideration of 47 lakhs. Mr. Sakshar has taken a loan of 35 lakhs, which is 80% of stamp duty value from SBI for the purchase of such house, which was sanctioned and disbursed at the rate of interest of 12% per annum on 1st July 2021. So what is the date of loan, amma? 1st July 2021. Right, sir. What is the loan amount, Andy? 35 lakhs. 35 lakhs. What is the date of sanctioning of the loan? 1st July 2021. That means while calculating the interest, we have to calculate the interest amount only for 9 months because the loan amount is being sanctioned on 1st July 2021. So that means we will start paying the interest only from July 21 onwards only, na? So from July 2021 to March 2022, you can calculate the number of months comes out to be 9 months only. So loan amount 35 lakhs, rate of interest 12% per annum, and for how many months we are going to pay? For the current previous year, amma, for the current previous year, we are going to pay only for 9 months only. So only 9 months interest you have to calculate. Okay. He does not own any other residential house on the date of sanctioning of the loan. Mr. Kevin and Sakshar do not opt for section 115 BAC. What is 115 BAC? Concessional rates of taxes. Okay, fine. Now, let's moving on. So here we have to calculate the deduction available, the total amount of deduction available to Sakshar with respect to the interest on loans paid only. So MCQ number 5. MCQ number 5. Calculation of deduction available to Mr. Sakshar with respect to interest on housing loan. Okay. So date of sanction of the loan, first July 2021. Loan amount 35 lakhs. 35 lakhs. Rate of interest 12% per annum, and the stamp duty value of the property purchased. So why are we finding out this? I'll tell you. I'll tell you why are we finding out this. See, you can see the loan amount 35 lakhs, which is given 80% of stamp duty value, amma. So if 35 lakhs equal to 80% of stamp duty value, then what is 100% of stamp duty value? Just cross calculation. For 80%, 35 lakhs. For 100%, how much? So 35 lakhs into 100 divided by 80, 43 lakhs 75,000 is a stamp duty value of the property amount. Okay. Now, what is the total amount of interest paid and total amount of interest paid during the previous year 2021-22? That will be 35 lakhs is a loan amount into 12% is the rate of interest into 9 by 12. Only for 9 months he has paid interest now. So 35 lakhs into 12% into 9 by 12. The total amount of the interest paid 3,15,000. And how he is going to get this 3,15,000 as deduction, sir? Simple answer. Under section 24, he can claim the interest on housing loan up to rupees 2 lakhs. Self-occupied property now, the maximum deduction allowed only 2 lakhs only, and the remaining 15 lakhs, 1,15,000, he can claim deduction under section 80 EEA. The remaining 1,15,000 he can claim deduction. Now, what is this section 80 EEA? So, any interest on housing loan paid will be eligible for deduction under section 80 EEA subject to the satisfaction of some conditions. What are the conditions, Amma? The loan should have been sanctioned during the previous years from 1/4/2019 to 31st of March 2022. The loan amount shall not exceed 35 lakhs. Stamp duty value of the property shall not exceed 45 lakhs. Like this, we have seen some conditions now. Do you remember? Let me take you to the material of section 18 EEA. In the second edition of the material, we'll be having this section 80 EEA. Come to the page number 48. Yeah, 48. Yes, here you have deduction in respect of the interest payable on loan taken for the acquisition of the residential house property, section 80 EEA. Who is eligible as an individual, right? And you can see the conditions here. The conditions to be satisfied: stamp duty value of the property shall not exceed 45 lakhs. What is the stamp duty value of the property amount? 43 lakhs 70 per 75,000. Now, hope you understand why you have calculated the stamp duty value of the property, because whether the stamp duty value of the property exceeded 45 lakhs or not. For verification of that purpose, we have calculated stamp duty value of the property. So the stamp duty value of the property we have purchased is 43 lakhs 75,000 only, which is less than 45 lakhs. So first condition satisfied? Yes, sir. Second condition, the loan should be sanctioned by the financial institution. Yes, State Bank of India. And the loan should have been sanctioned during the previous year, 1st April 2019 to 31st of March 2022. Yes. What is the date of sanctioning of the loan, Amma? The date of sanctioning of the loan, 1st July 2021. Sorry. The date of sanctioning of the loan, 1st July 2021. Right. The condition satisfied. Next, the individual shall not be eligible to claim 80EE. He is not claiming any 80EE deduction. The individual should not own any residential house. It was already given in the question that he is not having any other residential house property. The maximum deduction allowable 1,50,000. We are claiming is here only 1,15,000. And the deduction of 1,50,000 under this section is over and above the deduction allowable under section 24B. Yes. So that is why first we are claiming under section 24B 2 lakhs rupees. The remaining 1,15,000 we are claiming under section 115. Under section 80 EEA. Whatever the conditions are there under section 80 EEA, we have satisfied all the conditions. So the total amount of deduction allowable is the total amount of interest paid by him, 3,15,000 rupees. The total amount of the interest paid by him, 3,15,000, he can claim as a deduction with respect to the interest paid. Okay, now That was the MCQ number 5 now. The total deduction allowable under the relevant provisions of the Income Tax Act to Mr. Sakshar in respect of the interest on loan taken from SBI. Total 3,15,000 he can claim. 5B is the answer. 5B. Okay, sir. Every one of you. So these are the 5 MCQs relevant to the case scenario only. Now from the 6th MCQ onwards, these are independent. These are independent, not belonging to case scenario. For case scenario, we have only 5 MCQs. 5 MCQs we have completed, sir. 6, 7, 8 are independent MCQs. So just go through the first 5 MCQs and ask the doubts if any, Amma. For the first 5 MCQs, the answers, of course, even for the 6, 7, 8 MCQs also, the answers have not been provided in the RTP, Amma, right? So that's why I'm explaining you in the notes with the detailed manner, in a detailed manner. So try to note down this everything, Amma. From the question number 9 onwards, yes, you will be having answers in the RTP itself. No need to write it at that moment. But for the first 8 MCQs, you have to write down the notes. Okay. Now let's move on to the MCQ number 6. So MCQ number 6. Mr. Raj, aged 65 years, so he is a senior citizen, is a salaried person. He has taken LIP, means life insurance policy, on his major son's name on 1st of November 2014. The sum assured of the life insurance policy 16 lakhs rupees. You can see here the sum assured is rupees 16 lakhs and the policy was taken on 1st of November 2014. Right, sir? So any life insurance policy taken on or after 1/4/2003. Right, sir? So we can claim a maximum deduction of rupees 10% of the sum assured amount. Okay, now the sum assured of the life insurance policy 16 lakhs. Okay, yes, the premium payable is rupees 1,70,000. So sum assured 16 lakhs, the premium payable 1,70,000. So you can check out here 10% of the sum assured comes out to be 16 lakhs into 10%, 1,60,000. This is the eligible amount for deduction, ma. But as per the provisions of section 80C, the maximum deduction allowable is rupees 1,50,000 only. Okay, now you can claim one more doubt here. Sir, it was said like he is a major son. So what? Under section 80C, it was mentioned any child. So the child could be minor child, the child could be a major. Absolutely no problem. Under section 80C, any child, the word is used, any child. So life insurance premium paid on the life of the any child eligible for deduction here. Okay, ma'am. He has also taken a medical policy of 10 lakhs for self and his wife on 1st of November 2021. The medical policy is valid for 5 years. He has paid a one-time premium of 1,80,000. What is the total deduction available to Mr. Raj for the assessment year 2022-23? Okay, so let us start with the MCQ number 6. Yeah, MCQ number 6. MCQ number 6. Calculation of deduction available under chapter 6A Okay, mom. Now first, let us look at about the life insurance premium paid. So premium actually paid 1,70,000. Yes, ma. The premium payable is 1,70,000. Okay, sir. Now, sum assured is rupees 16 lakhs. Okay, now see if you look at our material about section 80C, this is 80G. Yeah, here it is. Eligible investments under section 80C, right, sir? In that, the very first one is the life insurance premium paid for individual HF, including family. Now, when it comes to the detailed provision, life insurance policy on the life of the spouse, individual, child. It was clearly mentioned child. Could be a minor child, could be a major child. Absolutely no problem. And the amount of the deduction is purely depends upon the year in which you have taken the policy. If the policy was issued on or before 1/4/2003, then the 20% of sum assured. If the policies was issued in between 1/4/2003 to 31st of March 2012, 20% of the sum assured. In if the policy was issued on or after 1/4/2012, then 10% of the sum assured. I guess in my discussion right now, I guess I have mentioned as 1/4/2003. Make a correction, sir. See, if any policy was taken on or after 1/4/2012, the maximum deduction allowable is 10% of the sum assured amount. 10% of the sum assured. So here the policy was taken on 1st of November 2014 and on or after 1/4/2012. Since on or after 1/4/2012 the policy was taken, the maximum deduction allowable is 10% of the sum assured. So 1,60,000 amount. So eligible amount for deduction 16 lakhs into 10% of the sum assured now. So 16 lakhs sum assured into 10 percentage, 1,60,000. However, restricted to rupees 1,50,000 because under section 80C, the maximum deduction you can claim is rupees 1,50,000. So with respect to the life insurance premium paid, the maximum deduction you can claim is 1,50,000. This is as per the provisions of section 80C. Okay, ma'am. Now let's come to the second point. Health insurance premium paid in lump sum. How much actually paid am health insurance premium paid in lump sum? You have taken a policy of rupees 10 lakhs, the policy valued 10 lakhs for self and his wife. On 1st of November 21, the medical policy is valid for 5 years. He has paid one-time premium of 1,80,000. 1,80,000. One-time premium. So generally, sir, when it comes to the health insurance policy, you have different types, right? So you can take a policy and pay the premium on yearly basis because health insurance policies will be having a validity of only 1 year generally, right? And in that previous year, if you paid the policy a premium amount, then it will cover all your medical expenses for 1 year, and for the next year coverage, and next year you have to pay the premium amount again. And if you want to take the medical policy, health insurance policy for a period of 5 years or for a period of 10 years, you can take by paying a one-time premium in lump sum. You can take. The coverage will be for more than 1 year. If you want the coverage for more than 1 year, you can take the policy and pay the one-time premium. And this is what happened in this case, Amma. So the assessee taken the health insurance policy for 5 years. He has taken the health insurance for 5 years, right? And he has paid one-time premium. So generally here the section covered is section 80D clause 4A. Section 80D clause 4A. Okay, now one-time premium, health insurance premium paid in lump sum. Do you remember the deduction is equal to 1 divided by fraction of the previous years, right? For which the health insurance policy covered, right? So here 1,80,000, whatever the premium paid, it is not eligible for deduction in a single previous year. It will be eligible for deduction for all the previous years for which the coverage is allowed. The coverage is available in the equal amounts only. 1 divided by the number of previous year for which the coverage is available. Do you remember the formula? Let me take you to that provision in our material. Section 80D clause 4A. Yes, here it is. Deduction where premium for the health insurance paid is in lump sum. 80D clause 4A. Okay, and here the appropriate fraction is equal to 1 divided by total number of the relevant previous years. What do you mean by relevant previous years? Relevant previous years means the previous year in which the lump sum amount is paid. In our case, when the lump sum amount paid, the lump sum amount is paid on 1st of November 21. That means previous year 2021-22. And the subsequent previous years during which the insurance would be in force. For how many subsequent previous years it is in force, invalid 5 years, so 2021-22 1 year plus validity 5 years. So that means the total validity of the health insurance policy taken by the assessee here is 6 years. 6 years. Okay, now see, you have paid the lump sum amount during the previous year 21-22. For that previous year validity is applicable, right? See, if you pay the amount in 21-22, right? So the coverage will be start from 22-23. Is it possible? No. Will you accept? No. Since you paid the amount in 21-22, the coverage will start from 21-22. So 21-22, 1 year plus additionally it is covering 5 years more only. That is what mentioned in the question now. The medical policy is valid for 5 years. So 21-22 it is applicable plus valid for 5 more years. Totally 6 years the validity period of the policy. Okay, now for 6 years the coverage will be applicable. Clear everyone? Now, so the total life insurance premium paid 1,80,000. So deduction under section 80D is equal to the total premium paid 1,80,000 into 1 divided by relevant previous years means 6 previous years. Okay, now so that will be 30,000 per annum. 30,000 per annum, and this will be allowed as deduction starting from the previous year 2021-22. Starting from the previous year 2021-22 till the previous year. Calculate 6 previous years, starting from 21-22. So 21-22, 22-23, 23-24, 24-25, 25-26, 26-27, up to the previous year 2026-27. Up to the previous year 2026-27. Okay, 30,000 per annum he can claim deduction. So finally, total chapter 6A deductions. Total chapter 6A deductions available. For the previous year 2021-22. With respect to the life insurance premium paid, the deduction is allowable under section 80C, 1,50,000. With respect to the Health insurance premium paid. The deduction is allowable under section 80D, class 4A, 30,000 rupees. So the total deduction allowable 1,80,000 number. 1,80,000. So that's the answer for MCQ number 6. MCQ number 6, 1,80,000 D. 6D is the answer. 6D. Okay, ma. Right? Every one of you. Now moving on to the MCQ number 7. Mr. Karan completed his MBA in April 2021 and joined XYZ Limited from 1st of May 2021. So that means during the current previous year, he served for the company only for 11 months. Only for 11 months. His basic salary is 2,25,000 per month and he's paid 12% of basic salary as dearness allowance. Okay, which is forming part of the retirement benefits. Great. He contributed 11% of his pay and dearness allowance towards RPF. Good. Right. So from whatever the basic pay and DNS allowance is getting, out of that 11% is contributing towards a recognized provident fund number, and company also contributing the same amount. So employee contribution equals to employer's contribution. Accumulated interest on provident fund as on 31st March 22, 49,325 rupees. Good. What would be the income chargeable to tax under the head salaries of Mr. Karan for the assessment year 22-23 if he does not opt for section 115 BSc? Good, ma. So let's start with the MCQ number 7. MCQ number 7. For the heading calculation of income from salaries for the assessment year 2022-23. Particulars, amount in rupees, amount in rupees. Particulars, amount in rupees, amount in rupees. So let's start. Basic salary, 2,25,000 into 11 months. Because he joined on 1st of May 21 na, so only 11 months salary we should consider. 2,25,000 into 11 months, 24,75,000. And then DNS allowance. DNS allowance. How much it was mentioned about DNS allowance? 12% of basic salary. It was mentioned 12% of basic salary as DNS allowance. So 24,75,000 is your total basic salary into 12 percentage. 24,75,000 into 12 percentage. 2,97,000 will be your DNS allowance. Okay. Now after that, what are we having? He contributed 11% of his pay and DNS allowance towards provident fund. So employees contributions towards RPF that will be eligible for deduction under section 80C. But anyhow, here we are calculated only income from salary. We are asked to calculate only income from salary, not the total income. So you just ignore about the employees contribution towards RPF. Okay. Its relevance will be comes later. I will tell you. Now it comes to the employer's contribution. Employer's contribution to RPF will be a perquisite and taxable in the hands of employee. So that you can take employer's contribution towards RPF. How much, sir? It is mentioned 11% of basic pay and DNS allowance. Basic pay and DNS allowance put together, how much it is coming? 24,75,000 plus 2,97,000. 27,72,000 into 11 percentage. 3,04,920. So employer's contribution to RPF 3,04,920 amma. But we have learned that employer's contribution to recognized provident fund, right? So exempted up to 12% of salary. Yes or no? Minus, you can take here directly. We have an exemption benefit now. Exempted up to 12% of salary. What do you mean by salary here? Salary means to be basic salary plus DNS allowance plus DNS allowance only forming part of retirement benefits plus commission as a percentage of turnover. Yes or no? If you look at in our material, yeah, this is module 1. Chapter 6 deduction. Yeah, taxability of the provident funds, tax treatment relating to provident funds, and when it comes to RPF, recognized provident fund, employer's contribution to RPF, amount in excess of 12% of salary is taxable. That means up to 12% of salary is exempted. Up to 12% of salary is exempted. What do you mean by salary for this purpose? Basic salary plus DNS allowance forming part of retirement benefits plus commission as a percentage of turnover. Okay, now here you can see up to 12% of salary. Here salary for this purpose you can take only the basic salary and DNS allowance, because as we don't have the commission amount. In the MCQ, there is no information about commission. So only basic salary and DNS allowance you can take. And again, it comes to 27,72,000 into 12 percentage. 27,72,000 into 12 percentage, which comes to be 3,36,000. Sorry, 32,640. So employer's contribution towards RPF is an exempted perquisite here, as the same contribution not exceeded 12 percentage of salary. Then immediately you can raise a doubt here. Sir, what about that 7,50,000 contribution condition? You have a latest amendment now, 7,50,000 rupees. Yes, right. You can check out that amendment in our material as well. In the perquisites topic, we have discussed that. Yeah, here it is. Yes, employer's contribution to provident fund. Right. The amount or the aggregate amount of any contribution made to the account of the assessee by the employer in a recognized provident fund, to the extent it exceeds 7,50,000 in a previous year, shall be taxable as a perquisite. Now you tell me whether the contribution here exceeded 7,50,000. No, the contribution made by the employer is just 3,04,920, which is less than 7,50,000, hence not taxable. So 7,50,000 condition also satisfied. Huh? Good. Now moving on, interest on contribution. Interest on RPF contribution. Right, sir. Sir, this I'll explain you in the working notes. Working notes number 1. This I will explain you in the working notes, and then if you add this, you will get the gross salary minus standard deduction 50,000 rupees. Then you will get income from salaries. Okay, mom. Now let's go for the working notes number 1. Calculation of taxable portion of with respect to interest on RPF contributions. Okay, ma'am. Now you can see here what is the total amount of interest received, ma'am? Total amount of interest received. $49,325. 49,325. Okay. Now the total amount of contributions made. Total contributions made. That means which including the both employer and employee amount. So 3,04,920 contribution made by the employer plus 3,04,920 contribution made by the employee. Equal amount of contribution kada, which comes out to be 6,09,840. Okay, but that means what is the rate of interest we got, Amma? Rate of interest 49,325 is the amount of interest we got for the total contribution of 6,09,840 into 100. 49,325 divided by 6,09,840 into 100. 8.08 or 09 percentage. Right, 8.09 percentage. We have know that rate of interest received up to 9.5 percentage anyhow exempted from tax. Yes or no? Right? Here the rate of interest we have received only 8.09 percentage, right? Which is less than 9.5% exempted. Condition number one. Condition number two, the total amount of the contributions made by the employer and employee not exceeded 7,50,000. So there is no chargeability of the interest with respect to excess contributions in excess of 7,50,000. Right, sir? So again, you can check out here the annual accretion by way of interest, dividend, or any other similar amount of nature, right, to the balance at the credit of the provident fund to the extent it relates to the employer's contribution included in the total income on account of the same having exceeded 7,50,000. Not exceeded 7,50,000. Now the total contribution not exceeded 7,50,000. Hence, this condition also satisfied. So the rate of interest not exceeded 9.5 percentage. So whatever the interest fully received by you, fully exempted. First condition. Second condition, the total contribution not exceeded 7,50,000. Hence, anyhow, that portion is also not taxable. But here you have to remember a very important point and very important amendment where you can expect this kind of amendment or MCQ for this attempt for sure. The latest amendment by the Finance Act 2021. The latest amendment made by the Finance Act 2021. That is, if the total contribution of the employee exceeded rupees 2,50,000, you just forget about that 9.5% provision. Okay, now, even if the rate of interest is less than 9.5 percentage, right? So if the employee's contribution exceeded 2,50,000, the interest related to the excess contribution made by the employee, that interest portion is taxable. Amma. Okay. Now let me explain you with the help of the notes. What is the employee's contribution, Amma? Employee's contribution to RPF 3,04,920. Yes or no? So that means excess contribution made by employee in excess of 2,50,000. Entama 3,04,920 minus 2,50,000, which comes out to be 54,920. This is the excess contribution made by the employee in excess of 2,50,000. Now, the interest portion relating to this excess contribution taxable as perquisite. Okay, so for the total contribution of 6,09,840, you have received an interest of 49,325. For the contribution of 54,920, what will be the interest amount you are going to receive? Cross calculation amount. So interest portion belonging to excess contribution of employee, that is equal to 54,920 excess contribution into 49,325, the total interest received for the total contribution of 6,09,840. Listen it carefully. For the total contribution, you have received 49,325. For excess contribution, how much interest portion? Just cross calculation amount. So it will be 54,920 into 49,325 divided by 6,09,840. So it will be 4,442. So the interest portion belonging to excess contribution of the employee is 4,442 rupees. Are you following, sir? Every one of you, right? You can also calculate in the very simple way, Amma. The excess contribution of the employee 54,920, and how much interest you are getting, Amma? Rate of interest 8.09%. So calculate chain, Amma, you'll get 4,442 rupees. In that way also you can find out. And are you following now? Now this interest portion is taxable in the hands of the employee, and 4,442. Okay. Now the gross salary 24,75,000 plus 2,97,000 plus 4,442. 27,76,442. Okay. Minus standard deduction 50,000. So you will get income from salary 27,26,442. 27,26,442 is the income from salary, and that is what asked in the MCQ only. So yeah, we asked to find out the income chargeable to tax under the head salaries. Only salary income we asked to find out, and we got 27,26,442. 27,26,442. Yes. Answer A, 7A. 7A. Okay, sir. Good. So in this particular MCQ, you just focus on this part, Amma. Very, very important. This calculation part is most important. Latest amendment by the Finance Act 2021. Clear? Now, MCQ number 8. Mrs. Kajal, the general manager of Measures Gold Limited, was paid a salary of 4,50,000 per month. So employer Measures Gold Limited, employee Mrs. Kajal. Basic salary 4,50,000 per month. The above salary includes non-monetary perquisite of 50,000 per month. Good. So that means that 4,50,000 including 50,000 non-monetary perquisites. As per the terms of employment, tax on non-monetary perquisite is to be borne by the Measures Gold Limited. So whatever the tax liability comes out to be on this non-monetary perquisites, the tax liability to be borne by the employer himself. Mrs. Kajal's contribution towards PPF 1,50,000. Deduction is allowable under section 80C. What would be the amount of the tax to be deducted by Messrs Gold Limited from the salary of Mrs. Kazal if she intimated to Messrs Gold Limited to opt for the provisions of Section 115 BAC? Almost, after the introduction of 115 BAC, there are very few questions asked on this. Among the very few questions, this is one of the MCQ. You can see in the first 7 MCQs, none of the MCQ based on this 115 BAC. This is the first MCQ. So finally, what we need to find out, Amma, the amount of the tax to be deducted by the employer from the salary of employee. TDS under section 192. What is the amount of TDS to be deducted? Okay, now, if you remember, under section 192, there is no rate of TDS have been mentioned, Amma. Remaining in all other sections of TDS, certain percentage is mentioned as the TDS amount to be deducted, sir. But under section 192, it was said average rate of tax. The TDS to be deducted based on average rate of tax. Okay. Now, first let us find out step number 1. Let us find out the total income. Step number 2, tax liability. Step number 3, average rate of tax. Finally, step number 4, TDS amount to be deducted. Okay. So let us start with MCQ number 8. MCQ number 8. So step number 1, calculation of total income of Mrs. Kajal particulars amount in rupees basic salary, $45 lakhs per month, sorry, 4,50,000 per month into 12 months, 54 lakhs. This is including non-monetary perquisite only. Including non-monetary perquisite. Right, sir? Okay. And next. Apart from this, does she have any other income, sir? Apart from the non-monetary perquisites, nothing. So, gross salary 54 lakhs minus standard deduction not allowed amount. Why, sir? Because she opting for 115 BAC. As per the provisions of section 115 BAC, section 16 deductions not allowed. Standard deduction, entertainment allowance, professional tax not allowed, sir. Okay, now. So this will be your income from salaries and this will be your gross total income, 54 lakhs minus chapter 6A deductions. Chapter 6A reductions again not allowed, sir. Chapter 6A reductions because you're opting for 115 BAC. When you opted for 115 BAC, chapter 6A deductions are not allowed, sir. Okay, so this will be your total income, sir. Taxable income 54 lakhs. Okay, this is your step number 1. Step number 2, calculation of tax liability. calculation of tax liability. So total income, tax liability. As per the provisions of section 115 BAC, very, very careful, sir. Okay, now up to rupees 2,50,000 nil, up to rupees 2,50,000 nil, then 2.5 lakhs to 5 lakh. So here the difference of income is 2.5 lakh into rate of tax for this slab 5%. It will be 12,500. Then 5 lakhs to 7.5 lakhs. 5 lakhs to 7.5 lakhs. Again, the difference of income during this slab 2.5 lakhs into rate of tax 10%, 25,000. Then 7.5 lakh to 10 lakh. Difference of income 2.5 lakhs into the rate of tax is 15%, 37,500. Then 10 lakhs to 12.5 lakhs. 2.5 lakhs is the difference of income into 20%, 50,000. Then 12.5 lakhs to 15 lakh. Again, difference of income 2.5 lakhs into 25%, 62,500. 62,500. Then above 15 lakhs amount, that means 15 lakhs to 54 lakhs. Here the difference of income comes out to be 39 lakhs into 30%. What is the slab rate applicable in my year? 30%. So 39 lakhs into 30%, 11 lakh 70,000. 11 lakh 70,000. So the base income tax comes out to be 11 lakh 70,000, sorry, 12,500 plus 25,000 plus 37,500 plus 50,000 plus 62,500 plus 11 lakh 70,000, 13 lakh 57,500, 13 lakh 57,500, for which add surcharge at the rate of 10%. Sir, here the total income of the individual exceeded 50 lakhs rupees. If the total income is in between 50 lakhs to 1 crore, the rate of surcharge is 10%. This we have studied in our the very first chapter and fundamentals. 10% is the rate of surcharge only. So apply the 10%, you'll get 1 lakh 35,750. Action number. So income tax plus surcharge comes out to be how much amount? 14 lakhs 93,250, for which add health and education cess at the rate of 4% into 4%, 59,730. So finally the total tax liability comes out to be total tax liability comes out to be 15 lakh 52,980. 15 lakh 52,980. This is a tax liability computation set, every one of you. Since the SSE opted for 115 BAC concessional tax rate system, you need to apply the concessional tax rates while calculating the total tax liability. Every one of you following now? Okay. Now, step number 3, calculation of average rate of tax. Calculation of average rate of tax average rate of tax is equal to, what is the formula you have learned here? Total tax liability divided by total income into 100. What is the total tax liability, Amma? The total tax liability just now we have calculated 15,52,980 divided by total income of the SSC 54 lakhs into 100. So how much you are getting, sir? The rate of tax 28.7589 percentage. 28.7589 percentage. That is a average rate of tax. Okay, now finally our answer, step number 4. Step number 4, calculation of amount of tax to be deducted. Calculation of amount of tax to be deducted by the employer. Calculation of amount of tax to be deducted by the employer. Okay, mom. Now, so first of all, the total amount of the tax liability, we have already find out 15 lakhs 52,890. So this is the amount of the tax to be deducted, but it was mentioned in the question that tax on non-monetary perquisites to be borne by the employer. So to that extent, we have to be deduct here, ma. Minus tax on non-monetary perquisites. What is the amount of the non-monetary perquisites? 6 lakhs amount. How did you get this? 50,000 per month into 12 months. It was mentioned in the MCQ now, 50,000 per month is a non-monetary perquisites. 50,000 per month into 12 months, 6 lakhs amount. 6 lakhs into, what is the tax liability on it? Apply the average rate of tax, 28.7589 percentage. 6 lakhs into 28.7589 percentage. So 1,72,553. So this is to be borne by the employer, kada? Borne by the employer. Borne by the employer. So that means this amount should not be deducted from the employee only. Okay, now. So finally, the amount of tax to be deducted from the salary of the employee. Amount of tax to be deducted by the employer is equal to, so 15,52,890 is a total tax liability. 15,52,890 minus 1,72,553. 13,80,337. 13,80,337. So this is the total amount of the TDS to be deducted by the employer. Okay, now, right? So look at the answer. Yeah. So 13,80,427. That is what we got the answer. 337. Sorry, it's not 890. It's 980. I got confused. 15,52,980. Na, the total tax liability we got 15,50,980. So 15,52,980 minus 172,553. 13,80,427. 427. Yes, got it. 8A. MCQ number 8. The answer is A. Check it out in the answers. 8A. Okay, now. So totally we got 8 MCQs from the RTP. All the 8 MCQs completed, right? So from problem number 9 onwards, they're straight away problems only, for which you also having answers in the RTP itself. So from here onwards, you people not required to write anything. Okay, because the answers are already there in the RTP itself. For MTPs, only the main answer is given A, B, C, D like that. The detailed answer is not given. That is why I have given you the notes only. This notes is very, very important. Okay, right? Now, let's go with the question number 9. So MCQ number 9. Mr. Dhanush, an Indian citizen, aged 35 years, worked in ABC Limited in Mumbai. He got a job offer from XYZ Incorporation, USA, United States of America, on 1st June 2020. He left India for the first time on 31st of July 2020 and joined in XYZ Incorporation on 8th of August 2020. So here the assessee is an Indian citizen. Till 31st of May 2020, he worked in India in ABC Limited, which is located at Mumbai. On 1st June 2020, he got an offer from XYZ Incorporation, which is located in USA. So he left India for the first time on 31st of July 2020. Now, during the previous year 2021-22, Mr. Dhanush visited India from 25th of May 2021 to 22nd of September 2021. So now during this period from 25th May 2021 to 22nd of September 2021, the period of holding is said to be in India. The period of holding is said to be in India. You can calculate in the May month, it will be 7 days. You can calculate 25, 26, 27, 28, 29, 30, 31. 7 days. June month, 30 days. July month, 31 days. August month, 31 days. And in September, 22 days. 22 days. Okay, ma. So, period of holding in India comes to be 121 days. Period of holding in India, 121 days. During the relevant previous year, that is 2021-22. He has received the following incomes for the previous year 2021-22. Okay, let us see. Salary from XYZ Incorporation, USA, received in USA. So place of accrual and place of receipt both are outside the India. So it is a foreign income, FI, foreign income. Dividend from Indian companies, it is Indian income. Agricultural income from a land situated in Punjab, it is an exempted income. Exempted under section 10 clause 1. Okay, ma. So when it is an exempted income, there is no need to bifurcate whether it is an Indian income or a foreign income. Next, rent received or receivable from house property in Lucknow. Indian income is the place of accrual in India, the house property located in India. So Indian income nature. Profits from a profession in USA, which was set up in India, received there. So you have rendered your professional services in USA, and that means the place of accrual outside the India, and the amount also received there under. So the nature becomes a foreign income. Okay, sir. Determine the residential status of Mr. Dhanush and compute his total income for the assessment year 2022-23. So we asked to determine the residential status of the assessee and as well as the total income of the assessee. From here onwards, every question will have the answer, Amma. So I'll explain you with the help of the answer directly. So answer starting from here, mom. So first of all, for determining the residential status of an individual, what is the basic rules, ma? Come to my running notes. Open the running notes, ma, of the second chapter, residential status. Every one of you. The basic rule is that we need to verify the B1, B2 conditions. B1, B2 conditions. What is B1 condition? He should be stayed in India for a period of 182 days or more during the relevant previous year. B2, we have two sub conditions: 60 days during the relevant previous year and 365 days out of the four preceding previous years. If B1 or B2, either B1 or B2 satisfied, is a resident. Both of the B1 and B2 not satisfied, is a non-resident. This is a general case. And once you decided he is a resident individual, then you have to go for the additional conditions. If both of the additional conditions are satisfied, he is a resident and ordinarily resident. If any one of the additional conditions are not satisfied, he is a resident but not ordinarily resident. Okay, now what are the additional conditions? He has been resident in India for at least 2 previous years out of the 10 preceding previous years. And number 2, 730 days out of the 7 preceding previous years. Right, ma? Every one of you. Now, sorry, here we have some special cases. 3 special cases. In the 3 special cases, we have to verify only B1 condition. If B1 satisfied, resident. B1 not satisfied, non-resident, straight away. Okay, ma. Now, what are the 3 special cases? You can see here. An Indian citizen leaving India for the purpose of employment. An Indian citizen leaving India as a crew member of Indian ship. And number 3, an Indian citizen or a person of Indian origin coming into India on a visit. For the special case number 3, we have a latest amendment. Of course, the amendment is given by the Finance Act 2020. In 2020 itself, we got this amendment. Okay, now, and what was that amendment? In the 3rd special case. So before the amendment, the provision is if B1 satisfied, straight away he is a resident. If B1 not satisfied, right, straight away we would have given non-resident straight away. But after the amendment, if B1 condition not satisfied, that means that 182 days condition not satisfied. Yes, absolutely, in our question, that 182 days condition not satisfied because his period of stay during the relevant previous year is just 121 days only. This is a 3rd special case because an Indian citizen visiting India during the relevant previous year. 3rd special case. This falls under 3rd special case. An Indian citizen or a person of Indian origin coming into India on a visit. Okay, and here you can see the B1 condition not satisfied as the period of stay is just 121 days only. So P1 condition not satisfied, straight away non-resident. Wait, you should not directly jump into conclusion as we have a latest amendment. Now, as per the latest amendment, if B1 condition not satisfied, now look at here. Look at here. After the amendment by the Finance Act 2020, that is with effect from the 1st April 2020, if such individual's total income other than income from foreign sources less than or equal to 15 lakhs, non-resident. Straight away non-resident, no need to verify B2 condition. Whereas if such individual's total income other than income from foreign sources exceeding 15 lakhs rupees, then you need to verify the B2 condition. And in the B2 condition, there is one change. That 60 days changes with the 120 days, modifies with the 120 days. So first one, the period of holding during the current previous year in India should be 120 days. And the second one, 365 days out of the 4 preceding previous year, that is common. Okay, now 120 days. So here you can see the period of holding during the current previous year 121 days. So that 120 days condition satisfied. Wait. That conditions you have to verify only when the total income of such individual other than income from foreign sources exceeding 15 lakhs. So first of all, you have to find out the total income of such individuals excluding foreign income sources, whether exceeding 15 lakhs or not. So look at here. 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 15 lakhs or not. So In this case, the total income other than income from foreign sources of Mr. Dhanush. What are we are having here? You can check out here. Salary from XYZ Incorporation. This is an income from a foreign source. Right, sir? So we should not consider this. Dividend from Indian companies. Yes, this is income arising from Indian sources only. Agricultural income, anyhow exempted. So we should not consider this. Rent receivable are received from a house property in Lucknow. Income from Indian sources should be considered. Rent profits from a profession in USA, which was set up in India. The setup in India, sir. See, if you look at the foreign sources income definition, I have mentioned you clearly here. Income from foreign sources means any income accrued and received outside the India, any income deemed to be accrued or received outside the India, and source of income situated outside the India. These are all said to be the foreign sources. Income from foreign sources. But we do have some exceptions. And what are the exceptions, Amma? Income from business situated outside the India, but controlled from India. Profession carried on outside the India, but such profession is set up in India. Right? You can see here the profession is set up in India, Amma. Profession was set up in India. This is excluded from the definition of foreign sources. And you can consider it for the calculation of total income for the purpose of that 15 lakhs calculation. You can consider this. So check out the total income. So 5 lakh 50,000, 4 lakhs and 6 lakhs. Sorry, this 4 lakhs we should not consider fully because it is income from house property now. 30% standard deduction is there now. Under section 24, 30% standard deduction, flat amount, right? So 4 lakhs minus 30% standard deduction, you will get 2,80,000 only now. So 5,50,000 plus 2,80,000 plus 6 lakhs. 5,50,000, 2,80,000, and then 6 lakhs. So the total income other than income from foreign sources 14,30,000, not exceeded 15 lakhs rupees. So not exceeded 15 lakhs rupees and falls in this category. Falls in this category. Such individual's total income not exceeding 15 lakhs. Straight away you can go ahead that he is a non-resident. He is a non-resident. So you can check out here. Answer. Since Mr. Dhanush, an Indian citizen who comes to India on a visit only for 120 days in the previous year 21-22, and his total income other than income from foreign sources does not exceed 15 lakhs, he would be non-resident for the assessment year 2022-23. Okay, everyone. So the answer for the first question completed. We asked to determine the residential status. The residential status comes out to be non-resident. Okay, next. Second question, we also asked to find out the total income. Let us find out. A non-resident chargeable to tax only with respect to Indian income. And what are the Indian incomes we are having here? First one, salary from XYZ Incorporation, foreign income. Dividend from Indian companies, Indian income. Agricultural income, anyhow exempted. Rent received from a property in Lucknow, Indian income. Profits from a profession in USA, foreign income. This is also not to be considered. It's a foreign income, sir. Only for the purpose of calculating that 15 lakhs limit, you can consider. You can consider, but for the calculation of the taxable income of a non-resident, for the purpose of calculation of taxable income, since it is a foreign income, we should not consider for non-resident. So only this 5,50,000 plus 2,80,000. 8,30,000 is a total income, sir. So you can check out the gross total income or total income 8,30,000. So that's the answer for MCQ number 8. Sorry, 9. MCQ number 9. Check it out, sir. Everyone. Completed. Now let's moving on to the problem number 10. Mr. Roy owns a house in Kolkata During the previous year, 2021-22, 3/4 portion of the house was self-occupied and 1/4 portion was let out for residential purposes at a rent of 12,000 per month. So part of the property self-occupied, part of the property let out. Now in that case, we need to take an assumption as if there are two separate properties. So self-occupied portion should be calculated separately. Let out portion should be calculated separately. When it comes to the self-occupied portion, the format straight away start with the NAV. The NAV should be taken as 0. When NAV is 0, standard deduction will also be 0 because standard deduction is always 30% of NAV. So the only deduction allowable with respect to the self-occupied properties, interest on loans subject to a maximum of 2 lakhs rupees. Okay now. Now when it comes to the let out property, the entire format applicable. GAV minus municipal taxes paid, NAV minus standard deduction minus interest on loans, then income from house property. Okay now, right. The tenant vacated the property on 28th of February 2022. So that means the tenant occupied the property for 11 months and the property was vacant during the March 2022. So 11 months, the property let out. 11 months, the property was let out. And 1 month, the property was vacant. Okay. Rent for the 3 months, rent for the months of January 2022 and February 2022 could not be realized in spite of the owner's efforts. All the conditions prescribed under rule number 4 are satisfied. So that means 2 months rent unrealized. So there is 2 months unrealized rent is there. This unrealized rent should be deducted while calculating the actual rent amount. Okay. The municipal value of the property 4,50,000 MRV and fair rental value 4,70,000 per annum and standard rent 5 lakhs. So municipal rental value 4,50,000, fair rental value 4,70,000, standard rent 5 lakhs. The municipal taxes at the rate of 10% of the municipal value during the year. So municipal rental value 4,50,000 into 10%. 45,000 is a municipal taxes. Municipal taxes 4,50,000 is a municipal rental value into 10%. 45,000. Okay. A loan of rupees 3 lakhs was taken by him during the year 2012 for acquiring the property. Interest on loan paid during the previous year 21-22 was 1,51,000. So interest on housing loan, interest paid during the previous year 1,51,000. Compute Roy's income from house property for the assessment year 2022-23. Okay, ma, let us start with problem number 10. You can check out in the answer. You have answers, right? Yeah. So computation of the income from house property of Mr. Roy for the assessment year 2022-23. First, with respect to self-occupied property, unit 1, 3/4 is self-occupied. As I already said, it starts with the NAV, net annual value, should be taken as 0. Standard deduction will also be 0. The only deduction allowable, interest only. Interest on loan. Interest on loan. The total interest 1,51,000, right? And we are calculating only for the 3/4 portion. So calculate 1,51,000 into 3/4. So you will get 1,13,250. So income from house property with respect to let out self-occupied portion, right? We have a loss of 1,13,250. Okay, now See, with respect to self-occupied portions, there will be always a loss in it. Now coming to let out portion, unit to 1/4 area let out. Computation of GAV, right? So this GAV calculation I'll give you in my notes only for your easy understanding. Problem number 10. Calculation of gross annual value for unit 2. What is the plinth area of unit 2, Amma? 1/4 portion. And hope you remember our steps for the calculation of GAV. Step number 1, it's a comparison between fair rental value and municipal rental value. What is the fair rental value given? Fair rental value 4,70,000. 4,70,000 is the fair rental value of the entire property, but we want only 1/4 of that because the let out portion is only 1/4 portion. 4,70,000 into 1/4, you'll get 1,17,500. Then after that, municipal rental value given 4,50,000. So 4,50,000 into 1/4. So 1,12,500. So among these two, whichever is higher should be taken. The higher value is 1,17,500. Take that to the step number 2. Step 1 value 1,17,500 should be compared with the standard rent. What is the standard rent given, sir? The standard rent given is 5 lakhs. 5 lakhs is with respect to the entire property, but we want only for 1/4 portion. So 5 lakhs into 1/4, 1,25,000. Among these two, whichever is lower should be taken. And whatever the value we are getting here is expected rent. So step number 3. Expected rent 1,25,000. And then actual rent received or receivable. What is the actual rent, sir? The actual rent is 12,000 per month. Actual rent is 12,000 per month. And the property was let out for 11 months. Okay, ma. Right? So it will be 12,000 per month into 11 months minus unrealized rent received 12,000 per month into 2 months. Even though the property was let out for 11 months, the owner was not received 11 months rent. The rent of the January month and February month not been realized by the owner. Unrealized rent. So that 2 months rent I am deducting while calculating actual rent only. So that means effectively he received only 9 months rent, that is 1,08,000. 1,08,000. Okay, now. And here you can see, sorry, the expected rent is 1,17,500, no? Whichever is lower. Okay. So actual rent comes out to be 1,08,000. Now here you can see the actual rent is lower than expected rent. Now you have to verify the reason why the actual rent is lower than expected rent. If the reason is found to be the vacancy, then GAV is equal to actual rent. You need to verify the applicability of the provisions of section 23 subsection 1 clause C. So whether the 23(1)(c) provisions applicable or not, you need to verify it. So put the heading verification of applicability of provisions under section 23 subsection 1 clause C. If the actual rent is happened to be lower than the expected rent because of the vacancy, then 23(1)(c) comes into the picture, and as per the provisions of section 23(1)(c), GAV is equal to actual rent. Okay, now let us verify that. Actual rent received or receivable for the let out period, that is 1,08,000, for which add actual rent received or receivable for the vacancy period, 12,000 per month is the actual rent into the property is under vacant for only 1 month. So 12,000 rupees. So actual rent of the property, if there is no vacancy, 1,20,000. 1,20,000. And what is your expected rent amount? The expected rent is just 1,17,500. So that means your actual rent is greater than expected rent if there is no vacancy. If there is no vacancy. Actual rent is lower than expected rent. So in reality, what happens? Our actual rent is only 1,08,000 now, which is lower than expected rent. Because of what, Amma? Because of vacancy. Since the property is under vacant for 1 month, therefore, the 12,000 rent we have not received, right? So had there been the property not been under vacancy, or actual rent would have been 1,20,000, which is higher than expected rent. So because of that 1 month vacancy, what happens? Our actual rent tends to be lower than expected rent. Hence proved section 23(1)(c) provisions are applicable. Section 23(1)(c) provisions are applicable. Therefore, gross annual value is equal to actual rent received or receivable, that is equal to 1,08,000 rupees. So GAV of this let out portion 1,08,000 rupees. Check it out, Amma. Gross annual value. Yeah, here you can see the gross annual value 1,08,000. 1,08,000. Okay, now less municipal taxes paid by the owner during the current previous year. What is the total municipal taxes paid? 45,000 rupees. 45,000 into 1/4. Only 1/4 portion we are calculating now. So 11,250. Then your NAV comes out to be 96,750. Standard deduction flat 30%, and then interest on loans 1,15,000 total interest paid into 1/4, 37,750. So the total deductions under section 24, 66,775. So income from the unit 2 let out 29,975. Positive income. Now the total income under the head house property. See, from the unit 1, you got a loss of 1,13,250. From the unit 2, you have a positive income of 29,975. So net income from house property, it will be a loss of 83,275. A loss of 83,275. Check it out, Amma. That's the answer for problem number 10. You can just ignore about this note point, Amma. This note point is applicable when it comes to filing of income tax returns. So that is a practical, not theoretical. Okay, this is not for examination purposes. Okay, just ignore this note point. But so the answer is negative 83,275. Answer for the problem number 10. Check it out. So the major important provision is that calculation of GAV here. That's it. Apart from that, nothing is there in this question. Okay. Computation. Now let's move on to the problem number 11. Mr. Ramesh, a property dealer. So that means buying and selling of the properties is his business activity. Buying and selling of the properties could be a land, could be a house property, right, sir? Is his business. Property dealer has developed an independent floor of 4 residential units. He sold one of its residential units to Mr. Vikas, who is a dealer in spare parts, for rupees 55 lakhs on 1st June 2021. Okay. However, the agreement was entered into on 1st of April 2021. Mr. Ramesh had been received a down payment of 5 lakhs by an account pay check from Mr. Vikas on the date of agreement. Okay, now, so the first transaction is between Ramesh and Vikas. Problem number 11. So the first transaction is between Mr. Ramesh, who is a seller, sold to Mr. Vikas, buyer. Okay, now, so here the date of agreement 1/4/2021, 1/4/2021, and the date of transfer 1/6/2021. Am I right, sir? He sold one of its residential units on 1st June 2021. So date of transfer 1st June, date of agreement 1st April 21. Okay. He sold it for 55 lakhs and right? Sold a residential unit for 55 lakhs rupees. Okay, good. Now, as in the date of agreement, Mr. Vikas paid a down payment of rupees 5 lakhs at account pay check, through account pay check. And this is happened as in the date of agreement. Okay, now Mr. Ramesh sold the remaining 3 residential units to Mr. Raj, Ashok and Ashish for 60 lakhs rupees each on 1st of December 2021. All the units were transferred by way of first time allotment. All the four units have been transferred by way of first time allotment. This is very important point here. Why this is very important point, I'll tell you. Okay, now all the 4 units which is transferred to Vikas, Raj, Ashok and Ashish by way of first time allotment to them. Okay, now so totally 4 units are there, out of which 1 unit sold to Vikas, the remaining 3 sold to Raj, Ashish and who is that one more person? Ashok. Okay, now let me draw this also for the very easy understanding. Mr. Ramesh, seller, transfer to Mr. Raj. What is the date of transfer? 1st November 2021, and at what value it was transferred amount? Sales value transferred for 60 lakhs. So 1st December 21 transfer take place. And then so Ashok, same 1st December 2021 for 60 lakhs. And to Mr. Ashish, same 1st December 2021 for 60 lakhs. Okay, now the stamp duty value of the each residential unit on various dates are as follows. On 1/4/2021, 65 lakhs. 1/4/2021, date of agreement. On the date of agreement, the stamp duty value is at 65 lakhs. On 1/6/2021, 68 lakhs. On the date of transfer, the stamp duty value 68 lakhs. And 1/12/2021, 70 lakhs. So when these are transferred to Raj, Ashok and Ashish, the stamp duty value is 70 lakhs. 70 lakhs. Okay, ma, this is the information provided to us. Now, let's look at the question. Discuss the tax consequences of the above transactions in the hands of each one of them, that is Ramesh, Vikas, Raj, Ashok, and Ashish. Okay, first let us discuss from the viewpoint of Mr. Ramesh, seller. Seller. Sir, the first transaction is between Ramesh and Vikas. Right. So he was transferred a residential unit to Mr. Vikas at 55 lakhs. As in the date of agreement, the stamp duty value is 65 lakhs. So 65 lakhs worth of property he transferred for 55 lakhs. So where a land or building or both held as a stock in trade, transferred for a consideration which is lower than stamp duty value, then as per the provisions of section 43CA, this entire problem is based on the provisions of section 43CA. So generally, whenever you heard of stamp duty value, the very first section number comes into your mind is section 50C. There is absolutely nothing wrong about it. But here you have to see the status of the seller. What is the nature of business he's doing? His nature of business is, I've already explained you, he is a property dealer. Buying and selling of the properties is his business activity. So the land, the building which is transferred by him is a stock in trade to him. If the asset transferred is a stock in trade, 43CA comes into picture. If the asset transferred is a stamp duty, capital asset, 50C provisions comes into picture. Here, since the nature of the business is property dealer, buying and selling of the properties is business activity. So whatever the residential units transferred is a stock in trade, 43CA provisions are comes into picture. Okay, now 43CA. Now, as per the general provisions of 43CA, full value of consideration is equal to stamp duty value. Now, when should we take this stamp duty value? The conditions are the actual sales consideration actual sales consideration, actual sale value is less than stamp duty value. Then you have to take the full value of consideration is equal to stamp duty value. But sir, which stamp duty value should I consider? Stamp duty value as in the date of agreement, stamp duty value as in the date of transfer. Because as in the date of agreement, it is 65 lakhs. As in the date of transfer, it is 68 lakhs. So which one should I consider? It's purely depending upon the satisfaction of some conditions. If the assessee has received either full consideration or part of the consideration as in the date of agreement, and that is to by way of any mode other than cash. If both of these conditions are satisfied, then stamp duty value as on the date of agreement should be considered. You can check out here. Here the assessee, that is Mr. Ramesh, received a down payment of rupees 5 lakhs, and that is to by way of account pay check as on the date of agreement. Yes. So as on the date of agreement, a part of the consideration is received, and that is to account pay check. Both the conditions are satisfied. Hence, stamp duty value as in the date of agreement should be considered. 65 lakhs should be considered, Amma. Okay, now. So your actual sales value is 55 lakhs, whereas your stamp duty value 65 lakhs. So your actual sales value lower than stamp duty value. So full value of consideration is equal to 65 lakhs. No, don't jump into conclusion. We have a latest amendment. What was that latest amendment? So generally we will see uh, the actual sales value is lower than stamp duty value, right? And after that, we also have to see if the total sales consideration not exceeding 2 crores rupees, then if the stamp duty value not exceeding 120 percentage of the actual sales value, then you should stick on to your actual sales value. So that means, sir, 120 percentage of actual sales consideration, actual sales value. That means 55 lakhs is your actual sales value into 120 percentage, which comes out to be 66 lakhs. Whereas your stamp duty value is only 65 lakhs. So your stamp duty value not exceeding 120 percentage of actual sales value. So here department said 20% of the variation, 20% of the deviation, up to 20 percentage acceptable. Up to 20% of variation is acceptable. No problem. So you can stick on with your actual sales value. Here the second condition not satisfied. Even though your actual sales value less than stamp duty value, but don't jump into directly full value of consideration is equal to stamp duty value. No, wait. This 120% condition should also be considered, because whatever the transfers taken place from 1/6/2020 till 30th June 2021, not exceeding 2 crores rupees. In these dates, only one transaction taken place, that is the transaction between Ramesh and Vikas. But the transaction between Ramesh and Raj, Ramesh and Ashok, Ramesh and Ashish taken place in the month of December 21. So this is out of this 120% condition. You just ignore it. Okay, now every one of you. So only the transaction between Ramesh and Vikas falls within this condition of 120 percentage. So you have to verify this 120% condition also. Your stamp duty value should exceed 120% of actual sales value. Actual sales value 55 lakhs into 120 percentage 66 lakhs. So your stamp duty value 65 lakhs only. As your stamp duty value not exceeded 120 percentage of actual sales value, you can continue with actual sales value only. So therefore, the first transaction Ramesh and Vikas, right, for the purpose of calculating the business income in the hands of Mr. Ramesh, we should consider the sales value as 55 lakhs only. Okay, so this condition has not been satisfied. The stamp duty value not exceeded 120 percentage of actual sales value. So the full value of consideration, you have to take your actual sales value, that is 55 lakhs only. Okay, now you should not take stamp duty value, you should take your actual sales value only. So you can check out up to this in the material. Yeah, here it is, problem number 11, tax consequences in the hands of Mr. Ramesh. Okay, so the general provisions explained here above 43 CA, right? So 110% is the normal provision, but in latest amendment, in case of a transfer here, from here the latest amendment starting, in case of the transfer of a residential unit by way of first time allotment between 12th of November 20 till 30th June 21, where the consideration does not exceed 2 crores, the consideration received would be the full value of consideration if the stamp duty value does not exceed 120% of the consideration received. So this is the latest amendment. So one should be very, very careful about this provision. This provision have already been covered in our material, Amma. Let me show you in our material. Yeah. Come to module number 1 of our income tax. Income tax module number 1. 43 CA started discussion in page number 158. And the latest amendment you can see here in page number 159. Further, in case of the transfer of an asset being a residential unit, if the stamp duty value of the residential unit not exceeding 120% of the consideration, are you following now, every one of you? General cases, we have to see 110 percentage, but we have a latest amendment. In this special case, we have to see 120% of consideration. What are the conditions, Amma? The residential unit transfer should be taken place during the period starting from 12th November 2020 to 30th June 2021, and the transfer should be by way of first time allotment, and the consideration shall not exceed 2 crores rupees. All the conditions are satisfied here, Kadamma? Everyone, right? So in respect of the residential unit sold to Mr. Vikas, right? So you can see the actual sales consideration 55 lakhs should be considered and as full value of consideration. Okay, so Mr. Ramesh for the assessment year 2022-23, taking the consideration 55 lakhs as full value of consideration. Clear? Now, in respect of the residential unit sold to Mr. Raj, Ashok and Ashish. See, come to our notes whereby you can easily understand. The actual consideration 60 lakhs, Amma, stamp duty value 70 lakhs. Now you have to verify here whether the stamp duty value exceeding 110 percentage, 110, not 120, 110 percentage of the actual sales consideration. Okay, now 110 percentage of actual sales consideration. Actual sales consideration 60 lakhs into 110 percentage, which comes out to be 66 lakhs. So the stamp duty value is greater than 110 percentage of actual sales value. Yes or no? The stamp duty value is 70 lakhs and your 110 percentage of actual sales value 66 lakhs. Greater than now. So the stamp duty value exceeded the 110 percentage of actual sales value. So we should take full value of consideration is equal to how much, Amma? The condition satisfied. Therefore, full value of consideration is equal to stamp duty value, that is equal to 70 lakhs. Okay, so you can check out here. In case of the residential unit sold to Raj, Ashok and Ashish, the business income would be computed in the hands of Ramesh for the assessment year 22-23, taking the stamp duty value, that is rupees 70 lakhs as the full value of consideration. Okay, everyone. Got it. Next. So tax consequences in the hands of Ramesh completed. Now moving on to the buyers. Seller we have completed so far. Now coming to the buyers. Who are the buyers? Vikas, Raj, Ashish and Ashok. First, let us look at the Vikas. Let us look at the Vikas. Vikas purchased the property for 55 lakhs and whereas the stamp duty value is 65 lakhs and stamp duty value 65 lakhs. Now here you need to apply the provisions of section 56 subsection 2 clause 10 income from other sources, gift tax provisions. Here assessee purchased an immovable property for a consideration which is lower than the stamp duty value. So 65 lakhs worth of property he purchased for 55 lakhs. Immovable property acquired for inadequate consideration. Now here we have to see the difference between the stamp duty value and consideration paid. Stamp duty value 65 lakhs and consideration paid 55 lakhs. The difference amount comes out to be 10 lakhs only. So here the gift tax provisions, the difference amount taxable in the hands of the assessee only when if the difference amount exceeding 50,000 and as well as 20% of actual sales consideration, not 10% amount, 20% as per the latest amendment, right? Because any asset transferred in between, any residential unit transferred in between 12th of November 2020 till 30th June 2021 and the sales consideration not exceeding 2 crores rupees and the transfer taken place for the first time allotment. All these conditions are getting satisfied kada kada. So the 20% condition comes into picture. The difference amount should also exceed 20% of the actual sales consideration. So 20% of actual sales value and your actual sales value 55 lakhs into 20%, 11 lakhs. So the difference amount should be greater than 11 lakhs. But here the difference is just 10 lakhs only. Sir, earlier we used to have only the 50,000 condition and if the difference amount exceeding 50,000 rupees, entire amount of the difference taxable. But apart from 50,000, we should also verify the another criteria. Generally 10%, but here it's a special case, latest amendment, 20%. The difference amount should exceed 20% of actual sales consideration. 20% of actual sales consideration comes out to be 11 lakhs, which is more than the difference value. The difference value is only 10 lakhs. So second criteria not satisfied and first criteria 50,000 satisfied, but second criteria not satisfied. Hence, nothing will be taxable in the hands of Vikas. Okay, now, so you can check out here. No income would be taxable in the hands of Mr. Vikas under their other sources since the difference between the stamp duty value 65 lakhs, actual consideration 55 lakhs does not exceed 11 lakhs, being the higher of 50,000 and 20% of actual sales consideration. Okay, now tax consequences in the hands of Raj, Ashok, and Ashish. For these people, the transfer taken place on 1st of December 2021, where the amended provisions not applicable, only 10% condition applied, 50,000 and 10%. So again, you can see here, what is the stamp duty value? The stamp duty value is 70 lakhs minus consideration paid 60 lakhs. The difference amount comes out to be 10 lakhs. Criteria 1, the difference amount should exceed 50,000. Yes, satisfied. Criteria 2, the difference amount should exceeding 10% of actual sales consideration. 10% of actual sales consideration. 60 lakhs into 10%, which comes out to be 6 lakhs. So the difference amount is greater than 10% of actual sales value. So second criteria also satisfied. The difference amount exceeding 10% of actual sales value. Satisfied. Hence, in the hands of Raj, Ashok, and Ashish, the difference amount of 10 lakhs would be taxable. Chundama. In this case, rupees 10 lakhs would be taxable in the hands of Raj, Ashok, and Ashish, each under the head income from house property, other sources. Since the difference between the stamp duty value 70 lakhs and actual consideration 60 lakhs exceeding 6 lakhs being the higher of 50,000 and 10% of sales consideration. Clear, ma? Everyone. That's it, sir. So that's problem number 11 for you. Check it out, sir, and ask the doubts if any. So totally we have 15 problems Amma in income tax RTP, out of which 11 we have completed. So let us start with the problem number 12. Mr. Kabir, a resident individual, aged 45 years. So the residential status of the SSE is a resident and the age is 45 years, so normal citizen. Furnishes the following particulars of his income and other details for the previous year 21-22. Income from T business 5 lakhs rupees. If you remember, we have studied this in the last chapter, that is miscellaneous concepts in income tax, where we have studied some rules like rule number 7A, 7B, 7C, rule number 8. So this falls under rule number 8. So income from T business, 60% of the total income should be treated as agricultural income and 40% should be treated as business income. Should be treated as business income. This reference we can see in the material. Computation of agricultural income, yes. Page number 210, 211, where we have seen some rules. Second module of income tax, module number 2. So rule number 7A, rubber business. 7B, coffee grown, cured, roasted and powdered. And rule number 8, tea business. Tea business, where 60% should be treated as agricultural income, 40% should be treated as business income. Okay, ma. So that means here, out of the 5 lakhs, 60%, that is 3 lakhs, to be treated as agricultural income, 40%, that is 2 lakhs, to be treated as business income. So while calculating the total income of the assessee, we have to consider only 2 lakhs as income from tea business. Next, loss from sugar business, loss, negative figure. Dividend from Indian company carrying on agricultural operations. So generally, whenever you have seen that agricultural operations, immediately the first thing comes to your mind, it is exempted income under section 10 clause 1. But in this case, it is not. It is not. So for company, it is agricultural income, exempted. But for the shareholder who receiving the dividend from a company which earning the income by carrying the agricultural operations. So for company, it is an agricultural income. For the shareholder, he is not receiving agricultural income, he is receiving dividend income. So in the hands of the shareholders, whatever the dividend he received from a company which carrying agricultural operations, the dividend income is taxable. Taxable, absolutely taxable. So this 1 lakh rupee taxable in the hands of the shareholder under the head income from other sources. Dividend incomes always taxable under the head income from other sources. Yes or no? Right? You can see the that particular point also. Yes, here it is. Here it is. A company dividend declaration, where a company derives agricultural income and declares the dividend out of such agricultural income, the dividend income so declared will not be considered to have the same character in the hands of the shareholders as in the case of the company. In this case, dividend income derived by the shareholders shall be taxable at the normal rates applicable to them. Okay, ma. So for company, you can assign the characteristic, it is an agricultural income. But for the shareholder, you should not assign the same characteristic. For shareholder, it is dividend income only and taxable. Clear, my everyone? Next. Agricultural income, yes, this you can take, exempted. Agricultural income exempted under section 10 clause 1. This is an exempted income. Okay. Next, salary received as a partner from a partnership firm and the same was allowed to the firm. Salary. So generally, whenever you come across the word salary, immediately you feel that this is taxable under the head income from salaries. Absolutely wrong answer. Here, salary received not as an employee, salary received as a partner. So whenever a partner receiving the salary from the partnership firm, the same shall be taxable in the hands of the partners under the head PGBP. If you remember section number 40 small b, assessment of the firms, there we have learned this point, right? Salary received as a partner, always taxable under the head PGBP. Okay, next, net annual value of the property 4,20,000 rupees. So we are provided with NAV information amount. So from NAV we have to deduct the standard deduction 30%. Then you will get income from house property. Loss from gambling 1 lakh rupee. This losses from gambling neither eligible to be set off nor eligible to be carried forward. Yes or no? Right? Losses from the gambling neither eligible to be set off nor eligible to be carried forward. Any losses from the casual incomes like winnings from lotteries, betting, gambling, crossword puzzles, races not including races, right now. Okay. So this 1 lakh rupee, you just ignore amma. Neither eligible to set off nor eligible to carry it forward. Next, short-term capital gains on sale of land. We have short-term capital gains. Loss on sale of shares listed in Bombay Stock Exchange. Shares were held for 15 months, means it is a long-term capital asset. And STT paid on sale and acquisition. Very good. Sir, it is, we can treat it as a long-term capital loss. Long-term capital loss. Sir, can I set off this long-term capital loss with the above short-term capital gains? Answer is absolutely no, you cannot. Long-term capital losses can be set off only with long-term capital gains. Yes or no? See this, cross utilization is there only with respect to short-term capital losses. Short-term capital loss, if you have the short-term capital loss, you can set off this short-term capital loss with short-term capital gains and as well as with long-term capital gains. Whereas if you have the long-term capital loss, you can set off only with long-term capital gains. Are you following now, every one of you? Sir, can I set off this long-term capital gains with any other heads of income? Answer is no. For capital gains, inter-head adjustment not allowed, amma, for capital losses. Okay. Now, what about this 3 lakhs long-term capital loss? This should be simply carried forward to next year and carry forward to next year. Next, life insurance premium paid 10% of the capital sum assured. You can claim deduction under section 80C. Bank interest on fixed deposits, income from other sources. Interest on savings bank account, income from other sources. The other details of the brought forwarded losses for pertaining to the assessment year 21-22. So that means previous year 2021. So in the previous year 2021, you got some losses and they've been carried forward to current previous year. Brought forward business loss from sugar business, brought forward short-term capital loss, brought forward loss from house property, brought forward loss from maintenance of race horses. So this loss we cannot be set off against any other heads. This loss can be set off only with the income from the same activity, that is maintenance of the race horses. And in the above table, we have not come across any income from maintenance of race horses. So this loss has to be carried forward to next year and day. Okay. Compute the total income. Compute the total income of Mr. Kabir for the assessment year 22-23 and the amount of loss, if any, that can be carried forward if he does not opt for section 115 BAC. So we asked to find out the total income and as well as the amount of the losses to be carried forward. Okay, so come to the answer. So problem number 12, first computation of the total income. Computation of the total income of Mr. Kabir. So first let us start with income from house property. We got NAV. How much, Amma? net annual value of the house property 4,20,000. So NAV 4,20,000, from which deduct the standard deduction, which is 30% of NAV always. So 4,20,000 into 30 percentage, you got 1,26,000. Deduct it ma. So you have income from house property before setting up of the loss 2,94,000. And so first of all, sir, before we are setting up the brought forward losses, first of all, we always have to see the current year losses. After all the current year losses being set off, then only you have to think about the setting off of the brought forward losses. Now, point number one, do we have any current year loss from house property? No, sir. In the current year, we don't have any loss from house property. Okay, good. Do we have any current year losses that can be set off against house property? Sir, in the current year, we have losses from sugar business 4 lakhs. This loss we can be set off against the income from tea business and the salary received as a partner. Because first of all, we have to see the inter-source adjustment. So you need not worry about the loss from sugar business because enough business profits are available in the current year. So this losses from sugar business can be set off with the current year business profits. Good. And any more? Yes, long-term capital loss. In the current year, we have one more loss, long-term capital loss. See, long-term capital losses, I've already told you that cannot be set up against any other heads. That's it. Only the current year 2 losses we have. And for business loss, we have enough business profits. Inter-source adjustment first should be tapped. And current year long-term capital loss that cannot be set off against house property income. So current year losses, okay, done. Now you can go for brought forward losses. So brought forward loss from house property, you can see 3 lakhs. But of course, you have income of only 2,94,000. So to the extent possible, set off amma. Brought forward loss 2,94,000. So totally we have a loss of 3 lakhs, out of which 2.94 lakhs we have set off. Still we have a loss of 6,000 amma. So this should be carried forward to next year. Next year. Clear now? Right. Next. PGBP. Income from tea business. I've already told you. Income from tea business, only 2 lakhs should be treated as our business income. So, income from tea business, 2 lakhs rupees. Salary received as a partner, 4,50,000. Salary received as a partner, 4,50,000. Okay, ma'am. So the total business profits available for set off of the losses. So first go for the current year losses, amma. So current year loss from sugar business, you have 4 lakhs. Set off losses from the sugar business, 4 lakhs. So after setting off of the current year losses, this is your current year loss. You still have 2,50,000 business profits. Now go for the carry forwarded losses. Brought forward business loss from sugar business, 1 lakh. Set off that brought forward business loss also on it. So still you have 1,50,000 that should be taken to the main column. So you have a business income of 1,50,000 after setting off your current year business loss and as well as carry forwarded business loss. Okay, next. Then after that, capital gains, you have a short-term capital gain of 75,000. So short-term capital gain, 75,000. And you have a long-term capital loss. I've already told you that cannot be set off against short-term capital gains. So let's go for the brought forward short-term capital loss. 45,000, you have a brought forward short-term capital loss. Brought forward short-term capital loss, 45,000, set off amma. So still you have a short-term capital gains, 30,000 rupees after setting off of the brought forward short-term capital loss. Next, income from other sources, dividend income. I've already told you that is taxable. Dividend income, 1 lakh rupee. Dividend income, 1 lakh. Agricultural income exempted. I've already mentioned you. Bank interest on fixed deposit, 55,000. Interest on savings bank account, 13,000. 55,000, 13,000. So the total income from other sources 1,68,000. Okay, ma. So all the 5 heads of income we have taken, and then go for the gross total income. You have a business income of 1,50,000, 30,000 short-term capital gain, 1,68,000 income from other sources. So you have a gross total income of 3,48,000. Okay. Now from the deduct the chapter 6A deductions. What are we having, Amma? Chapter 6A reductions, life insurance premium paid 80,000. So LIC premium paid 80,000 under section 80C. And apart from that, interest on savings bank account. Under section 80 TTA, we can claim a maximum deduction of rupees up to 10,000 rupees. So 10,000. So total chapter 6A deductions 90,000. So if you deduct the total income of the SSE is 2,58,000 rupees. 2,58,000 rupees. So in the problem, we were asked two things. We were asked two things. What are they, Amma? We asked to find out the total income that we have already find out 2,58,000. Second thing, the amount of the losses, if any, carried forward. So what are the losses we are going to carry forward, Andy? Number one, the long-term capital loss, 3 lakhs rupees. Number two, losses from the maintenance of resources, 60,000 rupees. And number three, the another 6,000 rupees of income from house property loss. This one. So these are the three losses to be carried forward, Andy. So you can check out here. Losses to be carried forward. Loss from house property 6,000. Loss from maintenance of resource 60,000. Long-term capital loss 3 lakhs. Okay, sir. So that's the answer, Andy. So just check it out and ask the doubts if any. Go through the answer. In this problem, there is no, there are no amendments. So this is a general problem. Like this problem, so we have done many problems like these in our regular classes. It's a very easy problem. Completed. Now let's moving on to the problem number 13. The biggest problem of this RTP. So look at the problem number 13. Mr. Kamal having a business of manufacturing of consumer items and other products. So Mr. Kamal is a manufacturer. Use the following trading and profit and loss account for the year ended 31st March 2022. So trading and profit and loss account, opening stock purchases, sales and closing stock, freight and cartage, gross profit. That is your trading account. Now coming to the profit and loss account, debit side, bonus to staff, rent of premises, advertisement, bad debts, interest on loans, depreciation, GST, tax, demand paid, miscellaneous expenses, net profit. On credit side, you can see the gross profit, income tax refund, warehousing charges. Okay. Following are the further information relating to the financial year 21-22. So we are provided with some additional information. Let us take the adjustments in the statement. Okay. First one, income tax refund. So here it is, income tax refund. The adjustments we will be discussed in a detailed manner while solving the answer. Okay now. Second adjustment is regarding bonus to staff. Pick out. Third adjustment is regarding advertisement expenses. Fourth adjustment is regarding miscellaneous expenses. Fifth adjustment is regarding GST demand paid. Sixth adjustment is regarding warehousing charges. Warehousing charges. Seventh adjustment is regarding depreciation. Depreciation. And any more adjustments? Yeah. Interest on loan includes an amount of 80,000 paid to Mr. X. Interest on loans. Interest on loans. Yes. Interest on loans. So compute the total income and tax liability of Mr. Kamal for the assessment year 2022-23 in a most beneficial manner. That means we need to calculate the total income and tax liability as per the regular provisions. Again, we need to calculate the total income and tax liability as per the provisions of section 115 BAC, concessional tax rate system. After that, we need to compare the tax liability under regular provisions, tax liability under concessional tax rate provisions. Whichever is more beneficial to the assessee, that should be your final answer. 2 times you have to calculate a day. Okay, now let's go with the answer. Since we provided with the information of the profit and loss account, our answer starts with the net profit for the year. For that net profit, we need to make the necessary adjustments. Okay, so look at the answer. Problem number 13. Where am I? Here. Computation of total income of Mr. Kamal for the assessment year 22-23. As I already told you, net profit. We should start with the net profit. And what is the net profit given, Amma? 50,85,000. Okay, 50,85,000. Now, let us see the adjustments one by one. So, first adjustment is regarding income tax refund. Sir, income tax refund. My first question is, whenever you paid the income tax, are you eligible to claim such income tax paid as a deduction while calculating your business income? Answer is absolutely no, not. Income tax paid is a disallowed expenditure under section 40 small a. So whatever the income tax you're paid, you're not getting as a deduction. It's a disallowed expenditure. Then the same income tax, if you received as a refund, then there is no need to treat the same as your business income. See, if earlier it would have allowed as a deduction, then I would have treated this income tax refund as my business income. But earlier, whatever the income tax I have paid, I have not get any deduction benefit. So in that case, whatever the income tax I got as a refund, there is no need to treat the same as my business income. There is no need to treat the same as my business income. But here I have treated that as my business income. I have taken credit. So whereby my business income got increased. Now the time to decrease my business income. So less income tax refund, 30,000 rupees. I need to decrease. So that's why my net profit from 50,85,000 decrease it to 50,55,000. So my business income is decreased by 30,000 rupees. Very good. Sir, we have an adjustment now. What is that? Income tax refund including an amount of 4,570 of interest allowed thereon. Yes. This amount of interest on income tax refund, this is taxable. But under the head income from other sources. Only the interest portion is taxable, Amma. Only the interest portion is taxable, and that is to under the head income from other sources, not under the head income from PGBB. Are you following now, every one of you? Okay. So this 4,570 we will consider in other sources. Okay. Now, next one. Add the expenses either not allowable, not eligible for deduction, but you have already claimed it as deduction. So that is why we are adding back to profit, or to be considered separately. That means to be considered, you can claim that as deduction, but not under the head PGBB, but under other heads. Okay. So there are certain expenses for which you are not eligible for deduction, but you have already claimed it as deduction. You already claimed it as deduction. So thereby what happens? Since you booked an expenditure, what happens? Your profit got reduced and now this expenditure should be disallowed and add back to profit. So whereby your profit will get increased. So that is why we are adding to profit. Since you claimed as expenditure, the profit got reduced. Now the expenditure is getting disallowed, so the profit should be increased. So add. Okay, let us see one by one. Bonus to staff includes, look at the expenses. The very first expenditure is a bonus to staff. We have an adjustment. Bonus to staff include an amount of 7,500 relating to previous year 2021. Ante not the current previous year, amma. What is our current previous year? 21-22. This is a preceding previous year. So in the preceding previous year, there is a bonus amount of 7,500, which you have not paid in that year. You have paid in the current previous year. Paid in the month of December 21. Ante you have paid in the current previous year, that is 21-22. Sir, bonus to staff, it is an expenditure covered by 43B, section 43B, where the deduction is allowable on actual payment. Since in the previous year 2020-21, that 7,500 you have not paid, kept outstanding, the same will be disallowed for the year 2021. But since you have actually paid in the current previous year of 21-22, this will be allowed as deduction for the current previous year 21-22 as per the provisions of section 43B. Deduction based on actual payment. Okay, ma'am. So for 21-22, you can claim it as deduction and you have already claimed it. You already claimed it. Out of this 71,250, 7,500 also is included now. So that means 7,500 you have already claimed it as deduction. Hence, no adjustment is required. No adjustment is required. Right? Next. Bonus to staff, you have an adjustment explanation here. Bonus for the previous year 2021 paid after the due date for the filing of the return for that year would have been disallowed under section 43B. However, the same has been paid in the current previous year 2021, 21-22. So it should be allowed as deduction for the current previous year 21-22. Since it is already deducted, included in the figure of bonus to staff, which is debited to profit and loss account, no further adjustment is required. No further adjustment is required. Okay, ma, everyone. Clear now? Next. Rent of the premises eligible for deduction. You have already claimed it. Hence, no adjustment is required. And advertisement. Yes, we have an adjustment. So far we have done with adjustment number 1 and 2. And look at the 3. Advertisement expenses including an amount of 2,500 paid for advertisement published in the souvenir issued by the political party. This 2,500 is a disallowed expenditure. Disallowed expenditure. Why, sir? Why? Because if any advertisement expenditure incurred, right, with respect to any souvenir, advertisement is published in any souvenir which is issued by a political party. Now, as per the provisions of section 37(2)(b), that's a disallowed expenditure. But you have already claimed it as deduction amount in advertisement. So that should be add to the profit. So look at here. Advertisement in the souvenir issued by the political party 37(2)(b), 2,500 is a disallowed expenditure. Since you have already claimed it, adding back to profit. Next. Bar dates eligible for deduction. Interest on loans. Interest on loans adjustment is there. Yeah, here it is. Interest on loans. So interest on loans including an amount of 80,000 paid to Mr. X, a resident, on which tax was not deducted. You should have deducted the TDS. Mr. Kamal has to deduct the TDS sum as per the provisions of section 194A. He has to deduct the TDS, but not deducted. So 40A 1A disallowances will be attracted. 40A 1A will be applicable, and what is the disallowance only? As per the provisions of section 40A 1A, disallowance at the rate of 30% of the expenditure incurred. So that means 80,000 into 30 percentage, 24,000 will be the disallowed expenditure. Out of 80,000, 24,000 should be disallowed. That means should be add back to profit only. So you can check out here 24,000 adding back to profit. Yeah, here it is. 30% of interest paid on loan to Mr. X. How did you get this 24,000? 80,000 is the total expenditure into 30% disallowance. 24,000. Get it, everyone? Next, come back to statement. Depreciation. In the books, we have claimed a depreciation of 1,07,250. This is as per the Companies Act only. But under income tax, the depreciation will be allowable as deduction, which is calculated as per the Income Tax Act provisions. Okay, now, so as per the income tax provisions, what is the depreciation? Look at here. The depreciation under the Income Tax Act 1961 works out at 65,000 rupees only. Right. So that means you're actually eligible for a deduction of 65,000 only. But you have claimed as per the Companies Act 1,07,250. You have claimed excess. So you have two options here. Either you can add back the excess portion or simply add back the depreciation as per the Companies Act and deduct the depreciation as per Income Tax Act. Anyhow, the ultimate impact will be same only. Okay. So look at here. Depreciation as per the books, we have added 1,07,250 less depreciation as per Income Tax Act 65,000. Okay, everyone. Next, GST demand paid. We have an adjustment. GST demand paid. Yeah, adjustment number 5. GST demand paid including an amount of 5,300 charged as a penalty for delayed filing of returns. Infraction of law, for the breach of law. Whatever the penalty you have paid here, this is the penalty for the infraction of the law. Any penalties paid for the breach of the law, for the infraction of the law, that penalty is not allowed as deduction, which is a disallowed expenditure. So this 5,300 should be add back to profit amount. Look at here. Yeah. Penalty levied by the GST department for delayed filing of returns not allowable as deduction, as it is being paid for infraction of the law. Next. And 12,750 towards interest for the delay in deposit of the tax. Sir, for your kind information, this is not a penalty, this is interest, which is compensatory in nature. Compensatory in nature. This is a breach of contract, not an infraction of the law, not a breach of law. This is a breach of contract. You promise to pay to the department that I will pay the GST every month by 20th, or 21st. But instead of 21st, you have paid on 30. So it is purely a breach of contract, not an infraction of law. Are you following or not? So any penalty paid or any interest paid towards the breach of a contract, which is always eligible for deduction, sir. Eligible for deduction. See, in the businesses, it is quite common. Sometimes due to unavoidable reasons, right, you happen to breach the contract, for which you happen to pay some interest, some penalty, which is eligible for deduction. Okay, now, since 12,750 is eligible for deduction and you've already claimed it, it's already included in the GST demand paid. Hence, no further adjustment is required. Okay, next. Miscellaneous expenses. Yes, we have an adjustment. Miscellaneous expenses includes 15,000 paid towards penalty for non-fulfillment of delivery conditions of a contract for the sale of the reasons for the reasons beyond your control. This is absolutely a business expenditure eligible for deduction and eligible for deduction. Suppose that you promise to deliver the goods by 15th of the October month, but due to some natural calamities, you are unable to deliver the goods on time. So the buyer raised a penalty against you since you are not fulfilled the delivery conditions. You have paid 15,000 rupees as penalty. So this is again a breach of contract, not as a breach of a law, infraction of a law. It's a purely breach of contract. This is quite common in the business activities. So 15,000 whatever you paid is eligible for deduction and you have already claimed it as deduction. In the head, miscellaneous expenses, hence no adjustment required. Next, amount of rupees 1 lakh paid to political party by check. This is not your business expenditure, Amma. This 1 lakh is a purely a disallowed expenditure. If you want, you can claim deduction under section 80 GGC. You can claim deduction under section 80 GGC, but not as per the business expenditure. This is not your business expenditure, which is a disallowed expenditure. So should be added back to profit amount. So chundamma, payment made to political party 1 lakh. Okay, everyone. Next. So all the debit items completed. And now moving on to the credit items. Income tax refund, we've already dealt with. Warehousing charges. Right. Sir, generally, we have an adjustment regarding the warehousing charges. That is adjustment number 6. Mr. Kamal had purchased a warehouse building of rupees 20 lakhs in a rural area for the purpose of storage of the agricultural produces. So here assessee engaged in the business of storage of the agricultural produces, which is a specified business as per the provisions of section 35 AD. This was made available for the use from 15th of July 2021. And the income from this activity is credited to P&L account under the head warehousing charges. So whatever the warehousing charges credited to your P&L account, this is your specified business income, sir, which should be treated and considered separately. This is not your normal business income. This is your specified business income to be treated and considered separately. Okay, so deduct this 22 lakh 50,000 also from your profit amount, less income from specified business 22 lakh 50,000. Okay, right? So these are the adjustments and regarding your normal business. All the adjustments completed. All the debit and credit items we have done with. In trading account, there are no adjustments under opening stock, purchases, sales, closing stock, freight and cartage, no adjustments. So that is why I have not discussed. The adjustments are all belonging to P&L account only. That's why I have dealt with the P&L account. All the additional information adjustments also we have done with under. Okay. Now let us find out our normal business income. So we have started with net profit 80 lakh, 50 lakh 85,000. 50 lakh 85,000 minus 30,000 income tax refund. Then add back the expenses and add 2,500 plus 1 lakh plus 5,300 plus 1 lakh 7,250 plus 24,000. 52 lakh 94,050 minus depreciation as per the Income Tax Act 65,000 minus specified business income. So you will get 29 lakh 79,050. This is your income from normal business. Now you can also consider or add the income from the specified business. How much income you got, Amma? 22 lakh 50,000. And you have incurred a capital expenditure for which you can claim 100% deduction as per the provisions of section 35 AD. You purchased a building for the storage of the agricultural produce. Yes or no? Purchased warehoused building for 20 lakhs. So this you can claim deduction under section 35 AD and 20 lakhs. Okay. So income from specified business, 2,50,000. The total PGBP income, 29,79,050 plus 2,50,000, 32,29,050. Okay. Now, income from other sources, we have only one income, that is interest on income tax refund. I've already told you now. This one, 4,570. Interest on income tax refund. So then you will get gross total income just 4,570, 32,33,620. From which claim the chapter 6A deductions. We have only one chapter 6A deduction, that is 80 GGC. I have mentioned here already. 1 lakh rupee, whatever the donation paid to political party, you can claim deduction since you paid that amount by check. Had you been paid by way of cash, that wouldn't have been allowed as a deduction to you. But since it is being paid by way of check, you can claim it as deduction under section 80 GGC. So check it out. Under section 80 GGC, contribution to political party 1 lakh. So finally, your total income 31 lakh 33,620. 31 lakh 33,620 is your total income. Fine, sir. Every one of you. Now, all these note points I've already explained while we are charging that profits and this. Now, computation of the tax liability of Mr. Kaman under the regular provisions of the Act. Okay. Now, first, tax on the total income, that is on 31 lakh 33,620. First 2,50,000 nil, then 2.5 lakhs to 5 lakhs at the rate of 5%, 12,500. Then 5 lakhs to 10 lakhs at the rate of 20%, 1 lakh. Then 10 lakhs to 31 lakh 33,620. So that means the difference of income 21 lakh 33,620 into a slab rate of 30%, 6 lakhs 40,086. So add share number, everything. You will get 7 lakh 52,286 as your income tax. Add 4% health and education cess. 4% health and education cess. How much you are getting, sir? 30,103. So the total tax liability 7,82,689. Okay. So round off to say it will be 7,82,690. The total tax liability as per the regular provisions. Okay. But however, here we have to calculate AMT provisions also. We need to apply and verify whether that regular tax liability is lesser than AMT or higher than AMT. We have to check it out. Sir, why AMT provisions comes here? The first 12, 13 problems also, we have done the tax liability computation. There we have not considered AMT provisions, alternative minimum tax provisions. Why in this problem? You can raise a doubt. Why? Because here the assessee has claimed a deduction under section 35 AD. So those assessees which are claiming deductions like investment based deductions, income based deductions, like they are liable for AMT provisions and their AMT provisions will get attracted. Okay, now so AMT provisions we have already learned and it not new to us. You can come back to the module number 2 of our income tax material, and in that you can come to the page number 215. Yeah, AMT, alternate minimum tax. We have learned this AMT concept as the last concept of our income tax subject. Okay. So when this is applicable, Income Tax Act 1961 contains profit linked and investment linked deductions in order to encourage investments in various industries. The taxpayers who are eligible to claim such deductions end up paying either no income tax or marginal income tax. 20 lakhs in this problem, na, he purchased a building worth 20 lakhs for the storage of the agricultural produce. The entire 20 lakhs we have given as deduction immediately on the same previous year. So whereby his specified income reduced it to 2,50,000 only. So here the assessee is paying very marginal income tax. But unfortunately, income tax, the major source of revenue to the government is income tax. If everyone started claiming deductions under section 35 AD, who are ending up by paying no taxes or marginal taxes, then how the department will get revenues? Yes or no? So that's explained in the third point. It has to be kept in mind that our government also needs regular or consistent flow of taxes, which is one of its major source of revenue to fund various expenses. So that is why, in order to ensure the payment of reasonable tax by such zero tax paying or marginal tax paying entities, the concept of AMT has been introduced. Okay, now to whom it is applicable? Any person other than a company. Sir, why not a company? Because for company, MAT is there, minimum alternative tax. For all other people, AMT is there, alternative minimum tax. Okay. Any person other than a company who has claimed deductions under Chapter 6A, Heading C, deductions in respect of incomes, or Section 10AA, that is, uh, the incomes which are exempted with respect to SEZ units, or investment linked deductions under Section 35 AD would be subject to AMT. So in our case, the assessee claiming 35 AD deduction, that is why I am invoking AMT provisions. Are you clear now? Every one of you. Non-applicability. However, the provisions of AMT not applicable to an individual HUF AOP BY if the adjusted total income of such person does not exceed 20 lakhs. Don't worry, in our case, adjusted total income exceeding 20 lakhs. Okay, next. Further, the provisions of AMT would also not apply in case of an individual HUF opting for concessional tax rate under section 115 BAC. Of course, we are now under regular provisions only. This point we will consider later. Now, come back to the answer. So, computation of the adjusted total income and AMT of Mr. Kamal. First, let us find out the adjusted total income, for which you need to start with the total income that we have already learned how to calculate it. Adjusted total income. Yeah. Adjusted total income means the total income before giving effect to Chapter 12 BA as increased by, and we need to add back to the total income. What are to be added back, Amma? If you claim any deductions under section 10AA, should be added back. If you claimed any deduction under section 35 AD, should be added back. And if you claimed any deduction under Chapter 6A, means only income based deduction, not all other ND. If you claim any income based deductions like 80JJAA, 80QQB, 80RRB, if you claim any of the deductions under these sections, only those to be added back under. Not all Chapter 6A deductions. Very careful, everyone. Okay, next. So add back these to your total income, Mama. You will get adjusted total income. Clear? So the total income, how much we got the total income, sir? The total income we got 31,33,620. Am I right? 31,33,620 is my total income. So this is which I need to start with. And I have not claimed any 10AA and I have not claimed any income based deduction, but I have claimed 35 AD deduction, which should be added to the total income under 20 lakhs rupees. But before adding the 20 lakhs, you can claim depreciation. Don't worry. See, you are denying 35 AD deduction. You are denying it. But you have to give the depreciation now. See, if you claim 100% of the expenditure as a deduction, depreciation not allowed. But now this 100% deduction, we are disallowing. So let him claim depreciation. So depreciation allowed, Amma. It is a building and put to use for more than 180 days. How are you saying like that, sir? ఎలా చెప్తున్నారు మీరు? Because in the question it was mentioned like it was started using from 15th of July 2021 onwards. You can calculate it was put to use for more than 180 days. So 100% of the normal depreciation you can claim. Okay. On buildings, the rate of depreciation is 10%. So 20 lakhs worth is a building and 10% is the rate of depreciation, which comes out to be 2 lakhs under. Okay. So add back this 18 lakhs rupees. Then you will get adjusted total income 49,33,620. And I've already mentioned you our adjusted total income is more than 20 lakhs. So AMT should be applied. And what is the rate of AMT? 18.5%. Yes or no? The alternative minimum tax is 18.5% of adjusted total income. So my adjusted total income 49,33,620 into 18.5%. 9,12,720. Okay, ma. For which add 4% health and education says 36,509. Add just say how much you're getting in the 9,49,229. Round up just say 9,49,230. Okay, sir. 9,49,230. Now, since the regular income tax payable is less than alternative minimum tax, yes. Our regular income tax, how much we got, Amma? The regular income tax we got, here only we have now 7,82,690. Our regular income tax. 7,82,690. And alternative minimum tax, just now we have calculated 9,49,230. So regular income tax less than AMT. So the adjusted total income to be treated as total income of the assessee and the tax liability 9,49,230. So in this case, Mr. Kamal has to pay a minimum tax liability of 9,49,230 rupees. Okay. The answer is not yet over. You have just completed as per the regular provisions. Now let's move on to the 115 BAC, alternative taxation provisions. So the concessional tax rate provisions. Computation of the total income and tax liability of Mr. Kamal for under section 115 BAC. So the gross total income, we need to start with the gross total income. 32,33,620. Yes or no? What is our gross total income? 32,33,620. For which add deduction under section 35 AD. Right, sir? So 20 lakhs should be added back because once you opted for 115 BAC, 35 AD deductions are not allowed in it. Since 35 AD is denying depreciation allowed. Under section 115 BAC, you can claim depreciation, absolutely no problem. So 2 lakhs depreciation, adjust cheyandi. So you need to add back 18 lakhs. Now your gross total income, and that itself is your total income because once you opted for 115 BAC, no chapter 6A deductions are allowed in it. So as per the concessional tax rate provisions, your total income is 50,33,620. Now let us find out the tax liability. So tax on total income of 50,33,620 up to 2,50,000 nil, then 2.5 lakhs to 5 lakhs, 5%, 12,500, 5 lakh to 7,50,000, 10%, 25,000, 7.5 lakh to 10 lakh, 15%, 37,500, 10 lakh to 12.5 lakhs, 20% means 50,000, 12.5 lakhs to 15 lakhs, 25%, 62,500, and 15 lakhs and above. That means up to 50,33,620. The difference of income is 35,33,620 at a slab rate of 30%. 35,33,620 into 30%. 10,60,086. So the income tax comes out to be action number 12,500 plus 25,000 plus 37,500 plus 50,000 plus 62,500. So 12,47,586. Add surcharge. Why? Why? Because my total income is greater than 50 lakhs. So we need to add the surcharge at the rate of 10 percentage into 10%. 124,759. So my income tax plus surcharge 13 lakh 72,345 minus marginal relief. Here marginal relief concept also there, Amma, because your total income is slight exceeding 50 lakhs. Right, just 33,620 is only the excess income you have in it. So there is a scope for marginal relief. Look at the computation of marginal relief on it. Computation of marginal relief. So tax payable on your total income 13,72,345. Just now we have find out here itself. Just now we find out. And then step number 2, we need to assume our total income is exactly equal to 50 lakhs. If exactly equal to 50 lakhs, what would be the difference under? Here it remains to be same 12,500, 25,000, 37,500, 50,000, 62,500. Only here it is changed under. Here you have to take 15 lakhs to 50 lakhs only. So the difference of income 35 lakhs into 30 percentage. 35 lakhs into 30 percentage. 10,50,000. So add cheste, you will get income tax. ₹12,37,500. For which add health and education says, sorry, no need to add amma. So you'll get an income tax of 12,37,500. Got it? 12,37,500. Okay. Now the differential tax liability, how much you're getting amma? 1,38,845. Yes or no? So we can write like this. When your total income is 50,33,620, your tax liability is how much amount? 13,72,345. And when your total income is exactly 50 lakhs, your tax liability is 12,37,500. What is the excess income you have in excess of 50 lakhs? 33,620. For which how much excess tax liability you are paying? You are paying an excess tax liability of 1,34,845, which is unfair. I'm just having an excess income of 33,620 only, for which I'm paying an additional tax liability of 1,34,845. So in order to get this amount as relief, I need to surrender this income to department. In order to get this amount as a relief, I need to surrender this excess income to the department. So means net, that means marginal. Marginal and additional net. Net ఎంత వస్తుందమ్మా మనకి 1,01,225. So this is my marginal relief. Okay. So 1,01,225 is my marginal relief. Deduct it. So then we are getting 12,71,120. Okay. And add health and education says, then you'll get 1,21,965. Should be rounded up to 13 lakh 21,970. So this is a tax liability as per the concessional tax rate provisions. As per the normal provisions, what is your tax liability, amma? As per the normal provisions, 9,49,230. As per the concessional provisions, what is your tax liability, Amma? 13,21,970. Which is beneficial to SSE, Amma? Go for the regular taxation provisions. Okay. You are end up by paying the low tax liability. At the same time, whatever the additional tax you are paying by way of AMT, that you can claim AMT credit and AMT credit kuda vastundi meeku. Check it out here. Since the tax liability of Mr. Kamal under section 115 JC is lower than the tax liability as computed under section 115 BAC, it would be beneficial for him not to opt for 115 BAC. Go for the regular provisions, AMT 115 JC provisions. Moreover, you can also claim the AMT credit. The benefit of AMT credit also available to the extent of the tax paid in excess of regular tax. So what is your AMT liability? 9,49,230. What is your regular tax liability? 7,82,690. How much additionally you are paying? 1,66,540. This you can claim as AMT credit for next year. Suppose in the next year, your regular tax comes to be some 10 lakhs and you have calculated AMT. AMT comes out to be some 8 lakhs. So you will pay this 10 lakhs as the regular tax is higher. So while paying this regular tax of 10 lakhs, you can claim minus AMT credit of the last year, 1,66,540. So you end up paying 10 lakhs minus 1,66,540. So you will be end up by paying 8,33,460 only for the next year. So that benefit is also there. So it's beneficial for Mr. Kamal to go for the 115 JC tax liability. That's problem number 13 for you. Check it out, sir, and ask the doubts if any. Done, sir. Now let's go for the problem number 14. State government of Madhya Pradesh grants a lease of coal mine to ABC Company Limited, an Indian company, on 1st of October 2021 and charged 8 crores for the lease. So this is the first transaction, the transaction between state government of Madhya Pradesh and ABC Company Limited. Okay. For which let me explain you with the help of the notes for the better understanding. Problem number 14. So the first transaction in between state government of Madhya Pradesh, it has granted lease of coal mine to ABC Company Limited, for which the ABC Company Limited has to pay a consideration of rupees 8 crores. Am I right? The state government of Madhya Pradesh charging 8 crores a day. Okay. Now, the first question is that finally, what is the question number? What is the amount of the tax required to be deducted or collected at source in respect of the above transactions, if any? So this problem is purely from the chapter TDS and TCS. Very important. And basically, in every examination attempt, we are getting a question from TDS and TCS. So one should be very careful here. Okay. Now, sir, here uh, we need to apply the provisions of TCS, tax collected at source. Tax collected at source. Okay. Here, State Government of Madhya Pradesh has granted a lease of the coal mine to ABC Company Limited for 8 crores a day. Now, here, you know, State Government of Madhya Pradesh is under an obligation of collection of the TCS, has to collect TCS at the rate of 2%, at the rate of 2% under section 206 C clause 1C. This we have seen in our material while we are discussing the TDS and TCS provisions. This we have discussed only, and you can come to the page number 193 where we can see the tax collection at source topic 206C, and in that we can see, yeah, here it is. Nature of the contract, license or lease. Mining and quarrying, the rate of TCS is 2%. Okay, ma. So you can ignore whatever mentioned here. This one, this is ultimate rate applicable 2%, 2%, right, sir? Now, so as per the provisions of section 206C 1C, here the state government of Madhya Pradesh has to collect the TCS only at the rate of 2%. So the TCS amount to be collected, TCS to be collected by state government of Madhya Pradesh is equal to 8 crores is the consideration involving here into 2%, which comes out to be 16 lakhs, which comes out to be 16 lakhs rupees. Okay, now this is the first transaction. Clear, everyone? Next, second transaction. ABC Company Limited sold coal for rupees 2 crores to Mahapower Limited, another Indian company, during the previous year 2021-22. Mahapower Limited furnishes a declaration to ABC Company Limited that the coal is to be utilized for the purpose of generation of power. The turnover of ABC Company Limited and Mahapower Limited for the financial year 2021 and the preceding previous year amounted to 11 crores and 12 crores respectively. Okay. Now, the second transaction is in between. The second transaction in between ABC Company Limited. It has sold coal at 2 crores to Mahapower Company Limited. Mahapower Company Limited. Okay, ma'am. Here, both of the companies' turnover during the preceding financial year, how much am 11 crores and 12 crores kada? The turnover of ABC Limited and Mahapower 11 crores and 12 crores. 11 crores during the preceding previous year and 12 crores during the preceding previous year. And here, this Mahapower Company Limited given a declaration. Given a declaration. What is the declaration? Whatever the coal purchased by Mahapower Company Limited here, the coal purchased is being utilized for the purpose of generation of generation of power. So this is a very important point here, that whatever the declaration is given by the Mahapower Limited is a very important point here. So generally, sir, here ABC Company Limited is required to deduct the TCS, required to collect the TCS under section 206C subsection 1 at the rate of 1%. Sir, what is this 206C subsection 1? Sir, which explains about whenever a person selling the goods worth rupees more than 50 lakhs rupees, he has to collect the TCS at the rate of 1%. There I'll show you in our material, Amma, don't worry. One percentage. Yes. Here you can see, Amma, every person being a seller shall at the time of debiting the amount payable by the buyer to the account of the buyer, or the time of receipt of such amount, whichever is earlier, collect from the buyer a sum equal to the following percentage of the purchase price. So when it comes to minerals being coal or lignite iron ore, 1%. 1%. During the COVID times, some 25% discount is given, Amma. After that, it is been, put it as same 1%. So 1% has to be collected as TCS. Okay, now, right? Every one of you. But actually, what happens, since here the assessee has given the declaration, that means the buyer has given the declaration that the power is the coal is used for the generation of the power. Since that declaration is given, now the seller is under no obligation to collect the TCS. I'll show you that provision also. Just give me a second. I'll show you. Oh, yes, you can check out here, Ma. As per the provisions of section 206C1, the seller has to collect the TCS under, right? But of course, if the buyer declares the declaration, like you can see here, however, no collection would be made under section 206C1 in case of a resident buyer if such buyer furnishes to the person responsible for collecting tax a declaration to the effect that goods are being utilized for the purpose of generation of power. So here the buyer has made a declaration, right, that the whatever the coal purchase, the coal is being utilized for the generation of the power. So here the seller is under no obligation to deduct the TCS, sorry, collect the TCS under section 206C1. Okay, now, so because of this declaration, now ABC Company Limited not required to collect the TCS under section 206C subsection 1, and neither under the 206C subsection 1H also. 1H provisions also not applicable here. As section 206C1 is not applicable, 1H also not applicable. 1H comes into picture when the value of the goods, the consideration exceeding 50 lakhs. You can check out here. As per the provisions of section 206C1H, the tax is to be collected in respect of the sale of the goods, right? Other than the goods which are being covered under section 206C1. In case of the goods which are covered under section 206C1 but exempted, the tax will not be collected either under section 206C1 or under section 206C1H. So 1H also not applicable here. Since the same is exempted under section 206C1, why exemption is given? Because of the declaration provided by the buyer. What declaration he provided? Whatever the coal I have purchased, that coal is being utilized for the purpose of generation of power. Okay, now from seller point of view, there is no obligation to deduct the TCS under. Now from the buyer point of view, you need to think. Who is the buyer here? Maha Power Company Limited. Now the buyer has to deduct the TDS under. He has to deduct the TDS. Now Maha Power Company Limited has to deduct the TDS. Under section 194Q. Under section 194Q, where the value of the goods exceeding 50 lakhs rupees. Right, the consideration paid for the purchase of the goods exceeding 50 lakhs rupees, on the excess portion, only on the excess portion, the TDS should be deducted at the rate of 0.1 percentage. 194Q, we have studied this. So let's come to the 194Q once. In our material, let us check it out once. Come to the page number 182. Yeah. 194Q, purchase of the goods. If the consideration exceeding 50 lakhs rupees, the TDS has to be deducted 0.1 percentage of the sum exceeding 50 lakhs. Okay. Now here the buyer, that is Maha Power Company Limited, has to deduct the TDS under. And what is the TDS to be deducted? TDS under section 194Q is equal to TDS under section 194Q is equal to 1.5 crores into 0.1 percentage. So 2 crores kada consideration. Why 1.5 crores? Only the consideration in excess of 50 lakhs liable for TDS. So out of 2 crores, 50 lakhs, you just, kept it out. On this 50 lakhs, no TDS provisions applicable. In excess of 50 lakhs, how much you are having, Amma? 1.5 crores right now. So 1 crore 50 lakhs into 0.1 percentage, which comes out to be 15,000 rupees. Now the Maha Power Company Limited, being the buyer, he has to deduct the TDS. Okay, now every one of you. And in order to set the Maha Power Company Limited as a buyer, he has to satisfy a condition. During the preceding financial year, his turnover should exceed 10 crores. You can check out his turnover is 12 crores during the preceding financial year. So he is a buyer as per the provisions of section 194Q. So, and the consideration paid exceeding 50 lakhs. So he has to deduct the TDS under. Okay, now. So that's the obligation of Maha Power Company Limited. Check out the answer. Section 194Q requires any person being a buyer who is responsible for paying any sum to the resident for the purchase of any goods of the value exceeding 50 lakhs. He has to deduct the TDS at the rate of 0.1 percentage of such sum exceeding 50 lakhs. Okay, now. So Maha Power Company Limited, right? Since during the preceding financial year, turnover exceeding 10 crores, it is a buyer. So the tax is not required to be collected on sale of coal to Maha Power Limited. However, the provisions of 194Q would apply, and the Maha Power Limited is required to deduct the TDS of rupees 15,000. Okay, so that's the answer for problem number 14. Check it out. Completed, sir. Now let's moving on. The last problem, problem number 15. Mr. Vikas, a resident in India, aged 80 years, super senior citizen. Right, sir. Up to 60 years, that means less than 60 years, normal citizen. Greater than or equal to 60 years, but less than 80 years, senior citizen. Greater than or equal to 80 years, very senior citizen. Yes or no? So the basic exemption limit applicable to him is 5 lakhs only. Having a house property in Mumbai. He has let out this house property to ABC Limited for a rent of 50,000 per month. 50,000 per month means per annum 6 lakhs. So that means the tenant is under an obligation to deduct the TDS under section 194I at the rate of 10%. From 1421, he does not have any other source of income. So he's having only house property income on day. Mr. Vikas required to file his return of income for the assessment year 22-23 if yes, why? First of all, let us find out the total income of Mr. Vikas. If the total income exceeding, if the total income before allowing chapter 6A deductions, if the total income exceeding basic exemption limit, yes, he is required to file the return of income. Let us look at that. Problem number 15. You can check out he's having only house property income, sir. Problem number 15. Problem number 15. So Mr. Vikas having only one income, that is house property income, sir. So since no other information is provided like fair rental value, municipal rental value, standard rent, so whatever the actual rent is receiving, that actual rent, let us assume that it is his GAV, gross annual value, 50,000 per month into 12 months, which comes out to be 6 lakhs. Minus municipal taxes paid, there is no municipal taxes. So this itself we can claim it as NAV. Minus the only deduction allowed is section 24 clause A, standard deduction at the rate of 30%, which comes out to be 1,80,000. As there is no interest on loans also, so directly we will be having income from house property. This itself is a gross total income as he is not having any other source of income, and this itself is a total income as the question is silent about chapter 6A deductions. How much am I? 4,20,000, which is less than his basic exemption limit. What is his basic exemption limit? 5 lakhs. Why? Because he's a very senior citizen. Very senior citizen. As his total income less than basic exemption limit, he is under no obligation to file the return of income. Not required to file the return of income. Not required to file the return of income. Generally, every student comes to this conclusion, which is absolutely wrong. Why, sir? As a total income less than basic exemption limit, yes, he is not subject to file the return of income. Wait. We have a latest amendment. And as per the latest amendment, you can check out here. Two parties involving who is the owner, The owner is Mr. Vikas, owner of the property. And who is the tenant? The tenant is ABC Company Limited. ABC Company Limited, tenant. What is the rent he is paying? He is paying a rent of 50,000 per month. 50,000 per month. But is he going to pay 50,000 to Mr. Vikas? No. He has to deduct the TDS minus TDS under section 194I at the rate of 10%. So 5,000 per month, he has to deduct the TDS amount. So the net rent payable to Mr. Vikas here only 45,000 per month. So here tenant is deducting a TDS of 5,000 per month. So the total amount of TDS is equal to 5,000 per month into 12 months. So the tenant is going to deduct a TDS amount of 60,000 rupees. If the tax deducted or collected is more than 50,000 rupees in that year, so then that assessee is under an obligation to file the return of income. Mr. Vikas, here, since the TDS amount against to him is greater than 50,000 rupees, now Mr. Vikas is required to file the return of income. Required to file the return of income for the previous year 2021-22, even though his total income is less than basic exemption limit. Even though his taxable income is less than basic exemption limit, now he is under an obligation to file the return of income just because the TDS against to him is more than 50,000 rupees. That is a latest amendment. So check out the answer. Here you can see the individual whose total income exceeding the maximum income not chargeable to tax, nothing but basic exemption limit, rupees 5 lakhs in this case. Since Mr. Vikas is of 80 years, is required to file the return of income. However, here you can see, sir, the total income of that individual is just 4,20,000 only, sir. In this case, Mr. Vikas' total income would comprise of only house property income and the total income 4,20,000, which is below the basic exemption limit of 5 lakhs. Now, as per up to this, we can come to a conclusion. Mr. Vikas is not required to file a return, but there is a latest amendment. One should be very, very careful. Now, this is the latest amendment, and actually, this is the latest amendment. One has to be very, very careful, sir. By notification number 3/2022, dated 21st of April 2022, the CBDT inserted a rule number 12AB, which prescribes that in the case of resident individual who is aged 60 years or more at any time during the previous year, that means this amendment is exclusively applicable to senior citizens, is required to file the return of income if the aggregate of tax deducted at source and tax collected at source in his case during the previous year is 50,000 or more. Now, as per this amendment, Mr. Vikas is required to file a return. Under ABC Limited is required to deduct the tax at source under section 194I at the rate of 10% of 6 lakhs. The total rent 50,000 into 12 months, 6 lakhs. Tax deductible is 60,000 rupees. Since the tax deducted at source in case of Mr. Vikas is more than 50,000, he has to furnish the return of income for the assessment year 22-23, even though his total income is below the basic exemption limit. Clear, sir, everyone? Right? And finally, we have taken an assumption that Mr. Vikas neither made an application to assessing officer under section 197 nor furnished any declaration to 197A for non-deduction of TDS. Okay, right. So with this, November 2022 income tax RTP discussion completed and all the 15 questions. Clear now? In the next session, I'll start with the GST RTP discussion of November 2022. Okay, sir. See you in the next class. Till then, have a good day and good night, sir.